Oh, okay, let go. Yeah, I just started the recording now for the purpose of keeping the record. Those of us who are busy, who may not be able to be here, they'll be able to have access to record. Then let's check another name here. Let's say, which name should I introduce now? Okay, Kamotia Lugat. Can you introduce yourself, please? Kamotia.
Hmm?
Kamotia Lugat. Okay, probably he's busy. Let's see. Tulo Tope Johnson. Can you introduce yourself, please?
Hello, good morning.
Good morning. Yeah.
Boss, good morning.
Good morning. Where are you connected from?
Lagos, Nigeria.
Oh, Lagos. Everyone, Lagos. Okay.
Yeah, we had a call this morning. We were on live together this morning.
Okay. On my chat. Oh, it's you. Okay.
Yeah.
Oh, perfect. Perfect. Yeah.
Yeah.
Okay. Okay, at least we have introduced 4 persons now. We will not be able to introduce everyone. Today, this morning class will be unique. We will have 2 sections, learning section and the live analysis session. And today as well is also oil and gas trading, like in form of oil report. We trade oil today. So we will also make analysis on crude oil. For those of us who are trading with us on oil, we make analysis on crude oil and know what the future of execution will be today. So the first section, we will teach you on the topic macroeconomic analysis. It's a very important topic you should know. I'm not the one taking you on the course at this fixed session, but we hope to last for 2 hours to avoid bothering you with a lot of information. So we'll be able to let you know about how you can use macroeconomic analysis to analyze the market, analyze events of the happenings in the world, and how you can be able to use it to make a profitable trade, like make a profitable execution. It's a unique one. Those of us who are our students, of course, you have access to startup capital. If you need a capital to start, we are funding capitals these days for people to start trading with. Those of us who are not our students, unfortunately, you're not going to get anything unless if you want to be our student. But once in a while, we do free value, free gift. So we have our first facilitator who's in the midst here. I can see his name here. I don't know if you are ready. Our moderator, are you ready? Goswell Moka, he's gonna be our facilitator who will be given, because he's an economist, he's also an analyst. So he's also part of us in terms of trading. I mean, like he's been around in our hub for a while. So if you are around, if you're available, can you just say hi and let us know whether you're available? Are you ready?
Yeah, I'm available. I'm ready. I'm available.
Okay, perfect. So to avoid spending much of time and save more time, I don't know how long the class will last. I will make you the host now, so you could start teaching. Please, everyone, pay attention. I'm just begging you, because if you miss this kind of lecture, you have missed a lot. So just spare a little time to listen and get their note down and jot down some information. You'll be free to ask some questions. Please, Moka, for you not to forget, I'm making you the host now. Please make sure you pay attention to the waiting room. People are trying to join, so that you could be letting them in. Immediately I make you the host, you could be able to let them in as soon as possible. Okay, thank you so much. You are now the host now, and over to you.
Thank you.
Yeah.
I can share my screen right now. So, good morning, ladies and gentlemen. I don't know if we have ladies in the in the class or only gentlemen. I don't know. Can I hear you guys? So I want to be sure everybody's hearing me.
Good morning, sir.
Good morning. We can hear you, sir.
Okay, thank you very much. I want this session to be an interactive session, all right? Because macroeconomics is something a lot of retail traders shy away from. They feel it's a difficult one, Same with me when I came into trading. But before I go into that, I want to introduce myself again. My name is Godswill Moka, and I'm hosting this class live from Nigeria, from Enugu State. All right. So I've been trading for about 6 years now. And when I started trading, I started like every other retail trader out there, trying to watch YouTube videos, understand technicals, to see how I'm going to be profitable with that, But the honest truth is that you can be profitable with technicals, all right? But on a long term as an investor, I don't feel that could be profitable because of changes in market cycles and things that happen globally that affect the financial market. Because you could be run over by what the big institutions are doing without understanding what is happening in the market, which I'm going to show you guys live examples, like what happened today, what happened yesterday. You will see everything actionable on the charts. So you can be able to interpret these things, because a lot of financial jargons are on the internet space when you want to study fundamental. I will use the word fundamental. Let me not use macroeconomics, so it doesn't sound strange or something that is, not common with retail traders. I will be using the word fundamental analysis, so everybody would follow along and understand what I'm trying to say. So hope you guys are with me.
Yes, sir. We are
Yes.
with you.
Yeah, it's going to be a fun one, and I would like it to be an interactive session so that everybody will understand what I'm saying. So we begin without wasting time. We're going to do also some sort of Excel sheet work, all right? Just a basic, statistical work. We start with macroeconomic analysis. So what is macroeconomic analysis in the financial market? So as we can see on the screen here, macroeconomic analysis in the financial market is the study of how broad economic factors influence the performance of financial assets like stocks, bonds, currencies, and commodities. Most of us feel that, when we just come on the charts, we just draw random lines on the charts. We need to understand what is driving these asset classes, what is giving these asset classes value, all right, at this point in time. If you understand the theory of cause and effect, it's also going to help you understand macroeconomics a lot. Because you need to ask yourself, what is making investors to buy this particular asset now? What is making them sell this particular asset now? Then you can overlay that on your chart using technical analysis. Right? You are not throwing away technical analysis, to embrace fundamentals. All right? Or throwing away fundamentals, no. Both of them have to work hand in hand. But the fact is that macroeconomics is what you need to understand the economic factors that are influencing the financial assets you are trading. To get a bias, if we are going to sell or buy a particular asset class, or in this scenario, maybe a currency, all right, then you can come on the chart and now look for, technical setup based on that direction, which I'm going to show you guys examples there, actionable of what's how to do that and how I've been doing that for some years. So here we are trying to understand it focuses on understanding the relationship between key economic indicators, which we are also going to be, listing some of them, in this course, policy decisions, market dynamics to predict trends and identify investment opportunities. So you can see that is the most important. You want to identify investment opportunities. But in this scenario, as traders, we want to identify trading opportunities. All right. So we go on to this little label here. So in macroeconomics, we can see some guidelines here. Macro data, things like the CPI, we already know, GDP, and the rest of it. Most of us think that when we say fundamental analysis, I hear, see most retail traders talk about it. When you say fundamental analysis, most of them, refer it to just CPI. Those things are not even up to, a percent of what fundamental analysis is all about. And you guys are going to be wowed today. So we have macro data like you guys already know, CPI and the rest of them. And then we have central bank policies, all right, like monetary policies, when central banks are doing things like quantitative tightening when inflation is high, and quantitative easing or lowering interest rates, all right, to help boost the economy. Then we go to sentiments. And when we say sentiment or sentimental analysis, most traders as well run away from this, but this is not the major topic of today. but I can just throw a little bit light on sentiment. Now, when we say sentiment, we mean things like using COT reports to understand, the perspective where big institutions are trading towards, not just only fundamental themes that you can read on news articles and websites. So then the next thing is geopolitics, which is very, very important. I was in a live video, I think that was the 2 days ago or something, that Sauche was saying something about Syria. Even yesterday live video, I was in his live video, when somebody made mention of that he was trading gold. Somebody came on live and said he was selling gold. And Mr. Uche was like, why are you selling gold? We are meant to be buying gold. So maybe the person was just looking at the chart just based on technical perspective. And maybe the person could have had a loss on that trade because gold was buying. This is just because of what is happening in Syria, geopolitical tensions, all right? Because when there are geopolitical tensions, uncertainty and fear in the market, gold, is an instrument used to hedge against inflation and uncertainty. It's a safe haven asset, all right? And not just that, the People's Bank of China resumed buying of gold during the weekend. So these are, the geopolitical risk index was going high because of what is happening in Syria, right? The Assad regime, being removed from power, from the opposition rebels. So these are certain things, and that is also helping the oil to push it upside this week, because this is something that most likely going to disrupt the supply chain. So knowing all these things is key. Then you can just come to the chart and just do whatever you do. Maybe you look for support and resistance, demand zone, supply and demand. For me personally, all these things are the same. Traders just give them different names to just suit their own how they want to do their thing, but all these things are the same. But the unique thing there is fundamentals. No matter the technical system you're using, in as much as others may be more accurate than others, but once you are in line with fundamentals, you can only be wrong maybe with your timing because of your technical strategy, depending on what you are using to analyze the chart technically. But on the long term, you definitely gets in line with the real direction. All right. So the next one here is government. When government give policies like stimulus, all right, like China did the last time, and policies that the Chinese government is doing, is saying recently, that made NZD, AUD to push the downside today, because they are talking about weakening the Chinese yuan because of expectations of Trump policies like tariffs. All right, because if Trump comes into power and increase tariffs, impose tariffs on Chinese goods, all right, exports from China are going to be expensive for countries, because the Chinese producers are probably going to factor in those costs in their products. All right. So when this thing happens, this is simple economics 101. Investors or maybe consumers are going to look for alternative products that are cheaper. So this helps, maybe encourage, US producers. People will start looking at the domestic, industries to buy from. So, and China is trying to reduce, weaken their currency to remain competitive in the market. And when they do this, the Chinese producers are going to find it difficult, because their currency is weakened, to now buy raw materials from countries like Australia, because that is the major trading partner of Australia, China and Australia, which is iron ore, the major commodity there. Because Australia produces about 28 to 30% of global iron ore, and China buys about 70% of that. So you can see that Australian economy is heavily, relied on, resources like this. So you can see, if you go to the chart this morning, you will see AUD boom, NZD boom, the same thing yesterday. All of them we are pushing to the downside against currencies like USD, JPY, and the Swiss franc. So you can see just that. So this is if you understand what is happening globally in the world, not just based on data, but policy and how central banks are going to react. So next we have here is external shocks. All right. When we talk things like natural disasters and pandemics, I know that most of us that are here was trading from 2019, 2020. We saw how COVID-19 affected the whole financial market. All right. Investors are putting their money in safe haven assets before we started seeing recoveries, and risky assets started coming up again. So this can affect, in terms of natural disasters, that can affect things like commodities. Let's say somewhere in Vietnam, because Vietnam is a huge producer of coffee. maybe you have something like flood that can affect storage, of those commodities. This could affect the supply chain, making the price of those products to push to the upside. So understanding all these things can help you, all together, build a macro outlook and understand the value of the assets you want to trade. Then come to the chart, do your normal technical analysis or anything you do, and then you have the chance of being on the right side. So, and then you can see what I wrote here. Note, what we look for is shifts in economic factors and policies. So that's what we are looking at. Like I have just explained, there is a shift in Chinese economic policy, which is expected to come in 2025 when Trump is put into power on, sworn into power on the 20th of January, I think, if I'm correct, next year. And we know that day, based on who Trump is, he's going to make some statement that's going to move and shake the market. He's one guy that is very, his actions speak for themselves. So I don't know if you guys are following. I want it to be an interactive session, like I said. So, yeah, you guys should tell me if you are following, if you have any little question to ask based on what I've just said before I write on. So I won't be talking to myself. I know you guys are enjoying it.
Yes, sir. I do really understand what you said.
Okay, so I should move on.
Yes, sir.
Okay, please, if you have any question, you can indicate by raising your hand, then I can unmute you, then you can ask a question. So before I continue, I don't know if anybody has a question before I continue.
Okay, for me, I think everything is clear. I like the way you've been explaining it, so I am following. Thank you very much, sir.
Okay, that's good. Thank you. So we go on to the next thing we have here, which is, why do financial traders use macroeconomics or fundamental analysis, as retail traders could call it? So the reason here is they use it to understand the real values, like we have said, of financial assets, like currencies, and to know if the current drivers of the assets are bullish or bearish. This gives traders an edge and a bias to take trades on. So you can see that you have been somehow maybe doing it the wrong way if you solely base your analysis on technicals. All right, we're waiting for when price comes to support or comes to, like Sauche is telling us before he met me, the host, because I know he's monitoring the OPEC reports. This is one of the, because we have OPEC reports today, and this is going to give us clue of how the oil market is going to be behaving in terms of supply and demand, especially on the supply side, right? That's what OPEC is all about. So this is an important factor that he always factor in, and as traders as well. If you want to trade the oil market in this level, you need to factor. It tells you, whether an asset is bullish or bearish. That is the importance of fundamentals. So when you come to the chart, based on your technical strategy, you just look for if maybe the underlying drivers are telling you that a particular currency is bullish. When you come to the chart, you don't have any business trading bearish setups. All right, in as much as technically pullbacks or because of profit taking, you can make money, but the ideal thing is just to look for bullish setup, because price must have identified a trend, and which I'm going to show you guys example with two currencies when we are done, to just do some little Excel sheet work. So then how is fundamentals different than technicals? All right, I love using simple things or everyday life scenarios to explain this to traders. So without using the information here, let me use another scenario that I think sounds more simple. Let's still use a car as an example. Now, technical analysis is just like, if you are driving a car, your side mirrors or your rear view mirror, which is showing you the past, all right, which is in this scenario historical data, what has happened, which you can use that to understand price patterns, how an asset behaves technically on the chart, and which could help you also forecast future price movements of that particular asset class. But look at fundamentals like your shield glass when you're driving, the glass in front of you. Let's assume that glass is blocked. So you could see that because with your car, you're trying to move forward. In as much as you can reverse, but you're trying to move forward, or even the shield glass behind you. So just assume that those glasses are covered. How do you want to see where you are going to, or a pothole, or what is coming to hit you, or what you are probably going to hit. All right. So this is what fundamentals is all about. Another example that I mentioned here is, you can look at it as, technicals is just like maybe your steering, your brakes, the pedals in your car. This is just what technicals is all about. They are just them. They are structural, all right? But fundamentals is like your experience in driving on different scenarios on the road. The way you are going to overtake a lorry or a Dangote truck that is carrying, full trailer load of cement is different from the way you are going to overtake something like a G-Wagon or a Benza. It's not going to be the same. You are going to be extremely more careful when overtaking a Dangote truck than when you're overtaking a G-Wagon if you drive. So that is just what fundamentals is all about. Then, because you now know how to apply your pedals on the car, how to move your steering, how to match your brake and the rest of it. Well, if you are going to probably speed up or move slowly, this is what fundamentals is all about. That's just a little scenario I want to explain the difference between fundamentals and technicals. So a lot of people are joining. Let me admit them. So as we move on, the question again now is, who is driving the financial markets, and who are these people who are using fundamentals, obviously? So, and from here, you can see that we said that the FX market is very different to stocks or options, where majority of the supply and demand is a combination of both retail and institutional traders, all right? But in the financial markets or the Forex market, most of the supply and demand is done by large banks and institutions. Banks and institutions are trading, with each other. You understand? This is how the exchange of currencies are moving. The volume as retail traders we are contributing is just maybe about 1%. All right. Because what is happening is businesses and companies are doing transactions. Most companies are hedging. Let me take, for example, if a company in Japan, all right, has a subsidiary that is a sort of a branch in America, and because of Trump policies, and they are seeing that, when Trump comes into power, the United States dollar is most likely going to strengthen. What are they going to, and they have staffs to pay. What are they going to do? They are going to hedge against such thing, all right? Because they know that when this thing comes, the value that the Japanese yen is to the United States dollar today is not what it's going to be that time. So they may want to buy a lot of United States dollars now to be able to hedge such loss, so that when it happens, because they must have used some sort of economic indicators, policies, and market sentiment of what's probably going to happen there, and what central bank actions is going to be like, to do those things now. So institutions are trading, using, trying to forecast the future, not because of when CPI has already come out and the rest of it, like what retail traders usually do. No, you are coming into the marketplace late. 90% of the move has already happened because you don't understand how the economy works. All right. So you can see here, big institutions are mainly driving the FX market. And when you have a market like that, you need to be looking at the market in the same way to know what the consensus is among participants of a given currency. Now, how do they look at FX or the financial market? This is what I've just explained. Some volume done by big firms are hedging orders for big companies, like you can see, or they are just exchanges for business transactions. However, most of the volumes traded in currencies are speculative as bets on the future direction for the currency. So this is just exactly what I've just explained. So this means that most of their buying and selling is speculative. They are just trying to speculate on the future, direction of an asset, or maybe, example, a currency. So we need to know how they are trading any financial asset, maybe the currency market. All right. So how they are looking at the market is exactly how we also need to look at the market, because they have the volume. They are the ones moving the market. If you always come on live with Mr. Oche, you will hear him saying a lot of things about volume. Brokers, having money, institutions having money, because these are guys who have the volume to move the market. So the question you need to ask yourself as a retail trader is, how are these guys doing it? That's why it's always good to learn from people with, some kind of, a little bit of, I've not worked in an institution before, but I've been tutored with traders who have worked with hedge funds and, big institutional firms like Goldman Sachs. So This gives you a kind of a snapshot, all right, of how these guys look at the market. So you are not just looking based on what a particular retail trader just drew lines on the chart and tell you this is how it works and that's blah blah blah. No, you need to understand how institutions are looking at this market. All right. So, and they are looking at this based on fundamental factors such as economic conditions, fiscal and monetary policies. When we say fiscal, we mean the government side, like tax, tariff. Most of these financial jargons is what make retail traders run away from fundamental analysis. Let me use that word. Let me not just bore people with macroeconomic, so it doesn't sound like something that is too big, but it's not. Monetary policies like actions of central banks, all right, to stimulate the economy and maintain maximum employment in the country. Ties with trade partners, like I mentioned, between China and Australia and New Zealand. Wars, you can see on October 1st, when Iran fired a ballistic missile, which was their first direct attack on the state of Israel. If you go there, you will see how oil pushed it up on October 1st. You can go to the chart on oil, whether WTI or Brent, you will see it there, all right? Trade disputes. Probably we could see, trade wars coming into, the financial markets, because Trump have already started doing that. When he made a tweet on imposing tariffs on Canada, Mexico, and China, right? We can see how the Canadian dollar lost about, that should be about 1.3 or 1.4%, and the Mexican peso lost about 2.6% that day. So if trade wars come, we're going to bring a lot of moves in the market. That is why investors were yearning for Trump. Most of you may not know the reason why investors were like, we need Trump, because his policies seems to drive the markets. All right. So now we've said a lot about why they look at fundamentals. So let's talk about something important, macroeconomic analysis myths, or maybe fundamental analysis myths. What do people, retail traders in this scenario, usually think about fundamental analysis? That is not true. Most reasons why they run away from it. So the number one thing here is forex. Most of them think that forex fundamentals.
Excuse
Sorry,
me, please, Mocha, please always check the meeting room, please.
Okay, yeah, I'm on that. Yes. So So most of them always think that fundamental analysis only means data releases such as CPI, GDP, PPI. Most of these data are interest rate decisions, this big data. That's what they think. No, this is far from the truth. All right. Like I said, that is just a tip of an iceberg of what fundamental analysis is. If you are doing that and looking for when figures are higher than expected, you are not really doing fundamental analysis or macroeconomic analysis. All right. You are just trading numbers, and which could if you don't understand other policies behind those figures, how is central bank going to react to those figures? All right. Even if when the market is expecting that figures are going to be high, there is a threshold where even if it's high, they didn't get to, like the job market data. It's investors are going to see it in a different tone, and something you think would strengthen the currency may not even strengthen the currency, because you're just looking at data. It is better than expected or more than expected. So economic data, like you see here, is only a small piece of the pie when it comes to fundamentals. Things such as politics, central bank actions, geopolitical events have a much greater impact than a single data release in general. All right. So the myth number 2 is you need to spend all day reading the news. I need to essentially be a full-time analyst to trade fundamentals. No, or to trade with fundamentals. You don't need to do that. Like basically me, if I tell you based on my own routine, when I wake up in the morning, do my morning, prayers and maybe exercise a bit, I just come to look at what has happened in the Asian market, Japan, China, Korea, and the rest of them. I just read through the news, look at the economic calendar, data releases that I need to put on my Excel to update my sheets to see what has happened during those markets, and then just maybe that's going to take me something like about depending on different asset classes you are looking at. If you are just looking at a few asset classes, it could take you, like I said, 30-40 minutes to just read and glance through it. But maybe it can take me 2 hours, but I'm looking at different asset classes. looking at both commodities, stocks, bonds. I even do such analysis and research on cryptocurrencies as well, looking at tokenomics. So it takes me about 2 hours to really understand what is happening in the financial markets in general. All right. So you just read through that and you set alerts, all right, on this news website, notifications, you enable the notifications. Twitter is another important place you can get fundamental, report from big economic analysts as well. Put notifications so your phone notifies you. Don't need to be on that. So when important or massive breaking news comes, you can just easily read and go your way, do what you want to do. Maybe in the evening again, you come to see what has happened in, based on our time zone here, what has happened in New York, in the US market. And then you update your sheet to see if other economic data comes in again. And that's just basically what you don't need to spend your whole time on the chart. That's what a lot of people think. That is not true. So you can see, as long as you are consistent with keeping up with the news daily, it should not take any longer than that. Plus, that is a split up throughout the day. So I hardly even notice the time commitment. So you don't even need to notice the time commitment, to stay up to date with all the news and to understand economic conditions that are happening, in the countries. All right. So the myth number 3 is that Forex fundamentals are complex and takes an economic degree, or any finance degree to understand. That is not true. But the truth is, if you want to take things, to the next level, maybe on some even financial companies can hire you without coming from a finance background. But maybe it could give you an edge. Maybe when you are running a lot of big forecasts that need some mathematical economic principles to understand the direction of some economy or some certain things, that is when economic. But as a retail trader who just want to understand what the global economy is saying, countries that are weak and the ones, the countries' economies that are weak and the ones that are strong, you don't need to have an economic. You just need to understand basic principles of how the economy works. And, you do your thing. So this myth is mainly set by those unwilling to learn. That is how I see it. Those who are afraid and don't want to, leave it, it's so big. You don't need, the lesson they begin to tell you is, you don't really need fundamentals to trade. You just technical, and they begin to tell you that their fundamentals respected, they are technical. When I hear such statements, it's very, very fun. Understand? If you say fundamentals respect the technicals, let me cite another example for you. On November 5th or 6th, when was that? When US had their presidential election. Are you trying to tell me that the reason why you pairs like Euro USD pushed the downside on that day, when Trump has started leading with margin and prediction markets are pricing in about 70% chance of Trump winning the election, that is because of technicals? No, that was pure fundamentals. Election, and because of his policies, because Trump is coming with policies that are inflationary to the US economy. And to combat such the Federal Reserve, which is the central bank in America, need to raise interest rates to be able to curtail that inflation. And investors is going to flock to where there is high interest. That is what we call carry trade, for that's the term used in it for people on the institutional side of trading. They call it carry, all right? But they're looking for interest rate differentials where there's high interest rate, but not just that, which we are going to come into. We take it step by step. So you just need some common sense and logic, not a deep understanding of economics, all right, to understand this concept. So like I said, I love our class to be interactive. So if anybody has any question, please, I want to know if you guys are flowing. You can ask before we go over to the next one. I know you guys are enjoying it, so you can ask. Hello. Hello, God's power.
Yes, I do understand most of the things you said. Okay. I actually don't have a question, but I'm coming up with one.
Okay, good. Okay, good. Maybe you can note it down. Anybody has any questions from what we have just explained that needs some clarity before we ride on?
Okay, from here, I don't have any question. I'm understanding what you're saying.
Okay, that's fine. So we should move on now, right? Okay, good. So now let's look at drivers of the G8 currencies. Now, when we say G8 currencies, we are talking of the major 8 currencies. That financial transactions are are done with globally, which is the euro, the GBP, Aussie, Kiwi, the greenback. I just want to be telling you guys most of this jargon. So because when you may be reading some financial reports and economic, there are certain things you will hear, you'll be like, what are these guys saying? So the euro, all right, the cable, that's what they call GBP. Aussie, AUD, Kiwi, the New Zealand, greenback. So when you see a lot of analysts talking on CNBC or news website, you may hear them say the greenback is weakened. The greenback is expected to be strong. They are talking of the United States dollar. That is what is called greenback. All right. So the Canadian dollar, I think that's what they call it, the loonie. Now, Swiss franc, Swiss, and then the yen. So I want to be, explaining these financial terms, so that when you are reading news articles, you don't get confused. These are more of the things that make retail run away from you. Like, what are these guys saying? So most of the time, those statements, they are intentional, just to confuse, the average retail traders who don't understand all these things. Yeah, believe you, sometimes they are intentional, just to make them shy away from it, and so that some brokers can sell you with what they want to sell you, and you come to the market and lose money. That's why when you go to brokerage events, when they gather people, you don't see them explain things in details like this. They just tell you blah 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 of things. They don't tell you all these things. So let's dive into what drives the major G8 currency. All right. I don't want to talk about other currency. Like on my own, I look at other currencies like Norwegian krone, Hungarian francs, and the rest of it. But I just want to focus, because I know that most retail traders focus on these 8 major currencies, and that's why I prepared the slide using these 8 major currencies. So the value of the G8 currencies is influenced by a combination of macroeconomic, which is fundamentals, geopolitical, and market-specific factors. Here is an overview of the primary drivers for each. So we start with the euro. All right. The key drivers, we talk about the European Central Bank when they give their policies, like interest rates changes. All right. Quantitative easing or tightening significantly affect the euro. So actions, speeches made by board members, decision makers in the ECB is probably going to act as a sort of a forward guidance, all right, to how maybe the euro is, whether the euro is going to strengthen or weaken. Now, let me explain forward guidance. Any terminology I mentioned, I know that retail traders may not be familiar with it. I will explain that. Now, when we say forward guidance, it's just a very simple thing, all right? Forward guidance. Central banks are trying to guide you, in future, if inflation keeps going up, they are not going to cut it. They will be restrictive, or they will be hawkish. They will raise interest rates. So the assessment they will make, those statements act as forward guide. They're not trying to tell you, if those things happen, we're going to do this. Interest rate is moving, inflation is moving to target, is coming down. Okay, meaning they are leading towards interest rate cuts, like AUD did on, I think that was on Tuesday, yeah, during their interest rate decision. They left it unchanged, but they were leaning a little bit towards the dovish side, that's bearish, and that's why we saw on Tuesday AUD weakening. A lot of things are making the AUD weakening, with policies from China as well. So economic data indicators such as GDP growth, inflation, unemployment within the Eurozone, all right, and debt dynamics, sovereign debt levels, with fiscal health of a member nation. And I will tell you another reason, just a free tip and knowledge, why euro, suffers the most, especially when there are, economic problems, a global one, because these are nations, member nations, coming together to say we want to use one particular currency. All right. So it is not as easy when one particular country is controlling its own currency. It's easy. All right. You can easily, make some policy, but these are different economies, different governments, different, tone of politics in different nations, just combining to give you the euro. So sometimes it's difficult. That's why euro suffers the more. All right. Like if you can make your research, on the Swiss franc shock 2015, signs we are coming up that thing is going to happen. You can see what this Euro Swiss franc did in 2015. The price moved more than 2,000 pips in a single day when the Swiss National Bank chairman removed the peg, all right, because it's it's beginning to weigh on them because they are trying to support the euro. Economies like Spain, Greece, Italy was having a lot of economic issues. So it's difficult because they can't control the euro on their own. These are member countries. That's why euro you see suffers the more. When you see dollar strengthens and you see euro is weakening, forget about what is making the euro is pushing up. These are just, which I'm going to show you guys here. They are just seasonality changes, all right? But data is still telling us that dollar is still in the pole position, is bullish, all right? It's just seasonality changes and maybe some big institutions, they're balancing their book, taking profit for the year. The year is almost gone. So you can see that for the past 10, 20 years, euro usually strengthens, during December. So that is just a seasonal something. So then we look at, okay, we have talked about debt dynamic. Then trade surplus, the Eurozone is heavily relied on exports. And one of the reasons why euro is rising because of the trade balance data was massive. It was very, very huge. That's another thing that's helping the euro. But the manufacturing sector and political instability coming from France, you can see how what is happening with their the French prime minister. So a lot of political instability happening there. Gas prices. So these are most of the things that is affecting the euro. All right. Now, currently, so and euro, the ECB is on a cutting cycle. So then political instability. All right, elections, geopolitical tension, and the relationship with the dollar is very often. All right. So we go to the next one, which is the British pound. Now, policies like Bank of England, all right, their policy interest decision and inflation targets, policies that on Brexit, all right, maybe if certain things change. So these are things you need to just go and study, what are those things, there is an agreement of Brexit, all right? Most of them is zero tariffs on trade, all right, with EU economies, free trade. So but excluding some certain goods and services, which I don't really know most of them, all right? But when some of those adjustments comes, that is, these can change, direction of currency. So you need to understand all these things. So UK economic data like GDP, inflation, retail sales, employment figures. Now, global trade relations, that is exactly something I mentioned on Brexit aftermath. UK trade agreement post-Brexit. What are those things that was in that agreement? When they start shifting towards those agreements, expect something to happen with the GBP, all right? Maybe to weaken it or maybe to strengthen it, depending on, the consensus behind what is happening there. So that's why it needs you need some time to master fundamentals, maybe at least 6 months to a year, because a lot of things must have happened globally in the world that you see different scenarios to really master, how to understand and analyze global economy. So we have the sensitivity to political uncertainty, like elections, and maybe France has election, Germany has elections, and Italy has elections. I usually focus on these 3 countries because these are the 3 biggest economies in Europe. Number 1 is Germany. Germany is the biggest economy in Europe, followed by France and then Italy. So I usually focus on things that are happening in these 3 economies majorly to understand where the euro is going to. Because it tells a lot, because the 3 of them contributes, I think, more than 50% of the Eurozone economy. These are European powers based on the EU. So we go to number 3, which is Australian dollar, the key drivers, Reserve Bank of Australia, policy interest rate changes, and forward guidance. I've explained this forward guidance earlier on. So commodity prices, prices of things like iron ore, coal, and gold, as Australia is a major exporter, like I explained. Australia is a major exporter of iron ore. All right, they produce about 28 to 30% of global iron ore. So you can see they are a major exporter. So China's economy, like I have explained earlier on, in the course, anything that is happening with China, and Australia is the largest, their largest trading partner is China. So AUD is sensitive to Chinese economic performance. Any policy, they come to make from China probably affects immediately. It's going to show. It probably affects. If it's a good one, it's going to strengthen the Aussie. If it's a bad one, it's going to strengthen, it's going to weaken the Aussie. So, and that is what has been happening this week. At least this one is, like a perfect example to tell you, how macro can. So, regardless of the technicals you are using, that doesn't the market does it doesn't concern the market, right? If you are not understanding how policies are, are working and changing around the world. So risk sentiment, like AUD is a risky currency, all right? So during economic uncertainties globally, investors will remove their money. There are going to be an outflow of liquidity from the Australian economy, and they put their money elsewhere where they think their money or investments are going to be safe. That has low yield, like dollar, Swiss franc, yen, gold. So domestic economy, employment figures, inflation, and housing market strength. So we go to New Zealand, the Kiwi dollar. So the key drivers are policy intention from the RBNZ, which is the Reserve Bank of New Zealand. All right, their inflation in commodities. New Zealand is known for their production and exportation of dairy products, all right, like milk. So China as well, China and Australia. So that's why you see when China made when we saw those reports from China, right? Both the AUD and the New Zealand started to weaken because of this is probably going to affect the Australian economy. I have explained how that is going. Maybe let me just throw a hint again in case you've forgotten. Now, what we're anticipating when Trump comes into power, all right, and Trump imposed those tariffs on China, which is going to make Chinese goods expensive. All right? Because when you put those tariffs, the producers are going to factor in those payments they are making on tariffs into their products. And when they do this is just normal behavioral finance or behavioral economics here. Consumers are going, because when it's expensive, because maybe their income level has not changed. All right. So they are going to look for alternative products, and now maybe they may start going to domestic producers, because most times these things are done to just boost the domestic economy. That is what Trump is trying to do, boost the domestic economy and US producers, so people can start buying their own products. All right. So when these things happens, now as US buys a lot of Chinese products, consumers from US are not going to be buying, because now Chinese products are expensive. So they may not be looking at exports again. They are now looking at it that are produced within their domestic environment. All right. So now it's going to affect things like Australia, because most of the raw materials China uses in producing these things, they buy it from Australia. So when there is weak demand of their products from US, the Chinese producers are going to suffer. So meaning it's going to affect Australia. So meaning people are not Chinese producers are no longer converting the Chinese yuan into the Aussie dollar to buy their raw materials to produce. So you can see how it's going to affect. You're going to show a deficit on their trade balance and begin to weaken the economy. All right, because when it begins to weaken, those people who are in Australia, because they have workers. So when it starts happening, it will be causing unemployment. People will be, pushed out of their job. People will not be earning more money. All right. People will tend to spend less. All right. And this becomes a problem for the Reserve Bank of Australia to curtail. Because if inflationary pressures come and what are they going to do? So it becomes a problem. So you can see the reason why AU and NZD weaken. This is just a very simple example. So risk appetite like AUD, the NZD benefits during global risk on environment when there is no problem around the world. Right? People put money in risky assets, high yields. So then domestic economy like GDP, inflation, and trade balances. So then we'll talk about the almighty dollar. So what are the key drivers? The Federal Reserve, which is that acts as the central bank, all right, in the United States. The interest rate decisions they are going to be making, maybe kind of via quantitative easing, quantitative tightening, or tapering, safe haven demand, right? USD strengthens during economic uncertainties or geopolitical crisis. Now, you guys are going to enjoy. Please, you should thank Sir Uche for this lesson, because most of the information you are getting here, you may not get it anywhere. Now, let me say something about this safe haven demand, right? Now, let me say a little something about the BRICS economy, something that has been all over, the news for some time now, that they are coming up with their own currencies. Now, it's not all about coming up with your own currencies. Investors are the one that will decide whether to adopt this or not, because these currencies we are meant to use it for international trade. No matter how Putin and Xi Jinping come to, they will not want to do that. It's going to be difficult for them. Now, look at tariffs now being threatened to be imposed on China by Trump, and they are saying they want to weaken their currency. If you want to weaken, because China is an export-driven economy. So if they want to do it to remain competitive, and Russia is doing their own business based on oil and gas, then what happens? They may not want to weaken their own. All right, so that is why it's a very big problem. So when people, for me personally, I think BRICS is a force, but not a threat on the United States dollar. Nothing is going to happen to the dollar. The dollar is there. Personally, on my own opinion, another person can come up with it, but that is my own reason. Why? Because now, when during period of uncertainties, how these economies are structured, like let me use the example with Switzerland and United States. The president of America cannot just come and tell Jerome Powell to just do anything. No, they have independence. It's not like some countries here in Africa that president can just tell the central bank governor to do something and just like that, and things happen. And no freedom to do things the way it's meant to be done. Everybody just doing things anyhow. They go to the CBN reserve and just take money and just do whatever they want to do. That doesn't happen in the United States. They respect the rule of law and economy. So that is stable economy. That's why when there's uncertainties, investors go there. Look at Switzerland. It's a neutral economy. When things happen, they don't support anybody. Look at World Trade Organizations. Many big global organizations are there. All right, very stable economy. Switzerland operates with what we call canton. For example, if you go to Switzerland, you will see different cities like Zurich, the capital, Geneva, Bern, and Basel. The rest of them. The way Geneva operates is different from the way Zurich operates. All right. There nothing concerned from the federal level to tell them how they want to operate their own system. Their educational system, everything is different. So it's a very stable economy. All right. So there is, separation. Let me use the word separation of powers. Right. Maybe those who understand law very well, yeah, separation of powers. No, nobody is coming to interfere with what this president. Everything is stable. All right. So it's not like like Russia that Putin will wake up one morning and declare something. So you can see the reason why the dollar will always be there. Right? It's not like we are like China will just come and declare something. GDP. It's not like we are any other country you want to think of, like Brazil. They will come and declare something. They already have the parliament in their pockets. It doesn't work that way in these economies. So that is it. Then we have US economic data like GDP, non-farm payrolls, inflation, that's CPI and PCE. This PCE is the one that the Federal Reserve usually pay attention to. All right, this is their best measure of, in other words, core CPI is important, but the Federal Reserve like paying attention more on the PCE. Then retail sales. Now we have global reserve. The dollar is a global reserve currency, obviously. USD is used in international trade and held as reserves by central banks. So you can see the reason why Trump is, being mad at most of this, because most of them want to drop the dollar for international trade. So that's why he is imposing most of these tariffs, right? If they go ahead, say they want to, but believe me, it's not going to be a success. That is just kind of, it's going to be difficult. It's difficult to, bring the dollar from where it is. My own opinion. That's just what I'm saying. So trade deficit. So persistent trade deficit can exert long-term pressure on the United States dollar. Let me explain what this thing means. When we say trade deficit, this means when a country is importing more than is exporting more. All right, meaning it is not earning much. The trade, their balance sheet is on negative, and this is when this happens. Consistently, 1 year, 2 years, 3 years, or in consecutive years or months. All right, their balance sheet is on negative, so this can exert a pressure on the currency. So and dollar is this kind of a thing can also affect the dollar. Like you can see, it's also a key driver So we'll go to the Canadian dollar, which is the number 6. The key drivers, we have the Bank of Canada, which is the central bank in Canada, sorry. Their interest rates, changes when they want to raise interest rate or cut interest rates. Forward guidance, I've explained forward guidance. Now, oil prices, because Canada is highly correlated with crude oil. I won't say much about this. This is something Sauchi is going to teach us because this is his area of specialty. All right. I can say something, but this is the area of specialty. We'll leave it for him later to explain better. All right. So Canada is highly correlated with crude oil because Canada is a large energy exporter. All right. So trade relations, particularly with US, like I said, these are two close economies. All right. And they even have an agreement, with their trade relations. And you can see Trump already tweeting or imposing tariffs, although he has had a meeting with the Canadian leader. They have said a lot of things, but Trump does these things the way he wants to do it. So things like this can easily affect the Canadian dollar, all right? When they are maybe in kind of a trade dispute or a trade war with America. So risk sentiment, Canada performs well when there is no global uncertainty. That is risk on or risk taking. All right. When there is no problem around the world, investors will put their money in risky assets because there is high yield. All right. Then domestic economy. Now things like their GDP, employment figures, and housing market trends can also impact the Canadian dollar. Now we go to the Swiss franc. One of my favorite currencies. So Swiss National Bank, which is the central bank in Switzerland, their policy, which is known for its intervention to weaken the Swiss franc and maintain competitiveness. Because now we are hearing reports, of Switzerland going back to negative interest rates again. They are trying to be competitive in the international market. So that means like borrowing money at no cost. So we have a safe haven status, because I've explained how stable the Swiss economy is, all right? So when there is problem around the world, investors flock, they buy a lot of Swiss franc during that period. If you go to the chart, let me go to the chart, for example. Let me go to daily. So let me be showing you guys practical examples as well. So let me go to something like the pound dollar now. Sorry, not pound dollar. Let me use pound Swiss in this scenario. Pound Swiss. Good. Now, if we go to the year 2020, all right, the WHO announced COVID. I think that was on the 20th of January. All right, they announced COVID, but towards the end of February to March, COVID began to hit America and some parts of Europe. Now, look, because when it happened, this was on the 18th of February, 2020. Look at how this is COVID. During that COVID period, investors, began to put their money in safe haven currencies like dollar. If you go to pound dollar, go to this date, you will see it happened. Go to pound yen, you can see the same thing. These three currencies. Look at what happened. So you can see that if you are not aware, in as much as I can see based on my own technical concept, price giving me that structure. But if you're not aware and you're just looking for buys because of what you are seeing, because you may think that maybe on a 4-hour, 1-hour price is an uptrend, but you don't have an idea of what is happening globally. This kind of move can blow your accounts if you're not applying proper risk management. All right. So you can see, being aware of all these things is crucial for you to really understand. So let me go back to our lesson. So let's continue. So as well, the Eurozone ties with Switzerland is another important thing. I've made a mention of the Swiss franc shock in 2015. All right. So close economic and trade links to the Eurozone, sensitive to the Euro movement especially. All right. Domestic stability. Switzerland's stable economy and banking system attracts capital inflows. Now, most of us, because of maybe we don't, try to read and research most of these things. Ask yourself the question, why your politicians in Nigeria here, when they lose money, they go put them in Swiss bank. Most of us don't know the reason why this is because of the stability in the economy. All right, where the value of the money they put there is not going to be eroded by inflation, lose value. So most of us don't know the reason why. Most of them, you see, they will tell you one day you come to the news on Channels TV or on Arise, and you hear them tell you that they discovered so loot from one politician from Swiss bank. They recovered. They put this money, or in Japan or in America, they put this money where inflation is no more, especially Switzerland, because Switzerland most times run negative. So even if they are not earning yield on that currency, they want it to remain that way. $1 million will always remain $1 million, because you know that the economy here is remaining bad. When they bring back that money, it still multiplies in value. Right? In other words, like there'll be much naira to convert. So that's the reason why they do that. So knowledge of macro will help, broaden your argument about why certain things happen in your, even in your domestic environment. So global risk appetite, squeeze strengthens during risk-off scenarios, all right? When there's uncertainty and problem globally, which we have mentioned. So the last one we have the Japanese yen, all right? Now, the key drivers are policies from Bank of Japan. Now, data is inflationary in Bank of Japan, and the Bank of Japan governor, Kazuo Ueda, is talking about hiking interest rates. And that is where we can see the recent strength in the yen. Data is supporting it. Now, I'll also show you guys, that on the chart. If you go to, I've been looking for sales on New Zealand yen, throughout from October, November. If I go to New Zealand yen, this was one of the pairs I was even looking at, and you can see trade policies happening even during this period. Let me go to New Zealand yen and show you guys. So we can see what has been happening. Let me go to 1 hour, for example. So you can see how it's been moving all through. So I don't care what is happening, all right, in the economy. I'm sorry, on technicals or anything. I just want to pay attention to what is happening on fundamentals, all right? So I'm only looking for my sell setups. So this was just during the announcement of China trying to, boost the economy in 2025, to combat, pressures that probably could come from the United States. That's Trump. That is the reason why NZD, appreciated with AUD, all right? Now, when the negative news came again from Australia, and this morning we saw it started losing most of its gains. So I'm not interested in all this bullish move. I'm only looking for sell setup. So when I saw this pullback in trading opportunity, you can see all through that New Zealand yen has been pushing to the downside. Right? Regardless of interest rate differential, which we are going to make mention, interest rate in New Zealand is bigger, but investors look for where there is safety of their money before interest rates. For example, in Nigeria here, CBN is offering about 20-something%, but investors are leaving because the economy is not stable. Inflation, the economy is not good. So they wouldn't want to put their money, investors wouldn't want to put their money in where, somebody can promise you, I'm going to give you 100% return of investment, but the person is a criminal. He will take your money and run. You rather go to somebody who is telling you, I will give you even 1.5%, and your money is safe. So that's what investors are always looking for. Safety of their capital, and then before they begin to look for returns on investment or interest rates, the interest they're going to get on their money. So safe haven, from strengthens the yen as well when there are instability and geopolitical crisis. Like I said, JPY is a safe haven currency. Trade balance, all right. Japan is an export-driven economy, right? They export a lot. Interest rate differentials, low Japanese rates make the yen attractive for carry trades, all right? But this can reverse during the risk of sentiments, all right? Because carry trades, investors will borrow money from low yielding economy where it's cheap, and then invest in high yielding economy. That is why most times we see the yen, go and check the dollar yen has been pushing to the upside. This is interest rate carry because it's there. And the economy was not doing so far, and the interest rate is down. So this is the reason why you can say dollar yen has been pushing to the upside for a long time. This is interest rate carry. So you don't have any reason, for now, looking for sales in dollar yen. Right? That wouldn't make sense. You rather go in direction of the trend and the flow of money, where the institutions are banking the direction or betting the direction we go to. So their domestic economy, like inflation, industrial production, and GDP growth. Energy prices, Japan's dependence on energy import affects the Japanese as well. When oil prices fluctuate, all right, it affects both the Chinese one and the Japanese because these are export-driven economy. They have industries, they produce a lot, so they are consuming a lot of oil, all right. So we can when you are interested in oil, this is something Sauche is also going to explain because this is also well grounded in the oil market. He can explain all these things better, the dependence on how economies like China and Japan can have effect on global oil prices as well. From the demand side, which is probably going to make oil prices to fall. So then this is just a kind of a comprehensive overview of the key drivers of these currencies. So now we see by understanding these drivers, traders and investors can better anticipate currency movements and adjust their strategies accordingly. So I ask again, let me know if everybody's following. We'll have a little break and you can ask your question before we go over to the next topic. Hello guys, hello traders and investors. Are you guys with me?
Yes, sir, we are with you. I do understand.
Okay. Does anybody has any confusion in what we have just explained? Or you want to ask anything?
For me, none at the moment.
Okay, great. So let me check the waiting room.
Hello, sir.
Yeah. Okay. Nobody's in the waiting room. So we continue. So the next one we are going to be looking at is understanding global capital flows, how money moves around in the economy, right? Like you guys should just exercise, we don't need to evade all those things. We're going to do some Excel sheet work that you can see just easily, just little statistical knowledge of how, I can just show you using two currencies of how using NZD and United States dollar, and you can see how, based on what is happening now in the economy. I'm going to focus on coincident economic indicator, what is happening now. So you can see the reason why the dollar has been stronger and the Kiwi has been weak based on data and then other policies surrounding it. So we'll go to global capital flows. Now, understanding global capital flows. Now, when we make mention of this, we are referring to the movement of money across countries for the purpose of investment, trade, or business activities. These flows are critical in financial markets because they influence currency values, stock prices, bond yields, and overall market dynamics, right? The key concept to know here is what are global capital flows. This is just when money moves between countries through investment, loans, or trade, all right? Examples are foreign direct investments. I don't know if you guys know what foreign direct investment is. Does anybody here know what foreign direct investment means? FDI. Hello? Can anybody tell me what foreign direct investment means before we continue? Any idea?
No, sir.
Okay, good. So when we say foreign direct, okay, somebody wants to answer. Is it God's power?
Yeah, from my own understanding,
Okay.
foreign direct investment simply means when a country is directly investing in another country's economy.
Good. Yeah. But not just when they are directly investing in other economies, investing in things that are of long-term assets like real estate, infrastructures, or trying to open a subsidiary or a branch in the country. Let's say Coca-Cola wants to open a branch in Nigeria. This is foreign direct investment. This is the reason why our president has been moving around the country looking for investors. But unfortunately, he's not going to get because the economy is not, accommodating for business to run and thrive. So he's just wasting his resources and Nigerian taxpayers' money moving around the country because the president are looking for stable economies. With this, nobody will want, with what is happening now, nobody will want to invest long term or even the short term investment. Nobody will want to do that. So now, like we said, money moves between countries through investment, loan, or trade. Example, a US investor buy German bonds, all right? Now, a US investor who wants to buy German bonds need to convert his United States dollar into the euro, all right, before he can be able to purchase government bonds in Germany. right? Now, a Japanese company invests in Australia real estate. It needs to convert the Chinese yen into the Aussie dollar before you can invest in real estate. Because if you have siblings who are abroad or people who are abroad, when they want to maybe begin to do some, real estate investments there in Nigeria, maybe if let's say the president is in UK, he needs to convert his pounds and sell it and convert it into naira, and then before the engineers or the contractors will start working on the building. So this is, kind of global capital flows, a basic, every real life example I can use to explain. So foreigners investing in the US stock market, people from different countries want to invest in US stocks. We are going to, let's say from Nigeria, you're going to convert your naira into the United States dollar. All right. Another thing again is let's say most of our people who want to go abroad and go for master's education or even degree education. All right, when they want to pay their tuitions and other fees, they need to convert their naira, let's say in UK, to British pound, or let's say in America, United States dollar. Right, so these are global capital flows. Money is flowing in this scenario from Nigeria to maybe UK as an example. When your brother who is in UK wants to send you money, it's a global capital flow. Away, maybe not in an FDI because it's not in an asset. All right. So he's sending you money. So there is flow of money from one particular economic to another. So somebody's raising his hand, overcomer, right? Overcomer Chijindo. So you can unmute yourself and ask your question. You can unmute yourself. Who do you want to overcome? Is overcomer your real name? Hello? Somebody raised his hand. Overcomer Chijindo. You raised your hand like you want to ask something. Hello? Hello?
Hello.
Okay, maybe it's a mistake. Okay, all right. So let's continue. So now types of global capital flows. Like I said, we have foreign direct investment, the FDI, long-term investment like building factories or acquiring companies in another country. All right. They will have portfolios investment. These are short-term investments. All right. Like when people are investing in financial assets, all right, like stocks, bonds, mutual funds, all right. Other capital flows are loans, aid, remittances, like I said, when your siblings or people or friends abroad is trying to send you money from foreign nations, that is Nigeria. These are remittances. These are also global capital flows, like I explained. Now, why do global capital flows happen? Some investors are always seeking higher returns. This is one example. Investors look for countries offering better interest rates, stock market growth, or economic stability. There are different reasons. When they want high yield on the asset, they look for countries that are offering high rates. When there's uncertainty in the world, they look for economic stability, like saving currency like Swiss franc, dollar, and yen. So there are reasons why global capital flows happen. But because of stock market growth, when they expect the stock market to be bullish to grow, investors will begin to put their money in, invest in stock markets of, those countries. Let's say in the United States, when you see some investors try to put money in the stock market, trying to beat the benchmark, trying to generate what we call alpha. Let's say the benchmark is S&P 500. Let's say the S&P 500 generates on a yearly, maybe 20%, for example. They see that, based on the economic policies, the stock market is going to grow. Investors are going to put their money in the US stock market, all right, in time because they may want to, pick stocks that are going to generate alpha, that is beating the benchmark, which is S&P 500. So now another reason why global capital flows happen is risk diversification, all right. Spreading investments across different countries to reduce risk. Like I mentioned earlier on, maybe when an example, not really a sort of an investment, maybe a kind of a Japanese company that has a company in the United States and they have staff that they need to pay, and they're seeing that in maybe 2-3 months time, when Trump policy starts coming into place, the yen is going to weaken against the dollar, and they need to pay salaries that time during those periods. They may want to buy the United States dollar now and hedge the risk when it's cheap, so it doesn't become more expensive for them. So that is a kind of an example. All right, the risk diversification. So currency trends. If a currency is expected to strengthen, foreign investors may buy assets denominated in that currency. Like I said, when the currency is expected to strengthen, investors will expectation. Now note, this is something traders need to understand. Market moves based on expectation, data, and probabilities. The expectation is that a particular currency is going to strengthen. They buy, not when it has strengthened. All right. If it's expected to strengthen because of some what we call leading economic indicators, investors and institutions will start buying a particular asset class. Then when coincidences that tell us what is happening in the economy right now, all right, like interest rates, sorry, not the inflation, GDP, all right. That's when retail data begin to trade things like CPI, begin to trade things like non-farm payrolls and the rest of them. This is what is happening, telling us the amount of jobs in the US economy right now, what's happening right now, not telling us anything about the future. Right? But consumer expectation can tell us things about the future. Will tell us, okay, maybe people are earning more money. It's like employment is becoming better. All right. We are seeing things like initial jobless claims. All right. It is reducing. Wow. So this is probably going to tell us that NFP is going to be better. That's why we see NFP being better, because initial jobless claims is kind of a little bit on the good side. And then consumer expectations is also a little bit on the good side. That is the reason why you saw NFP being a little bit better compared to last month, because last month was not because of the economy was so bad, but it was because of the Boeing strike and the natural disaster that happened. That's why we saw that 12K figure. All right. So these are, some of the things that investors can see, and they say, okay, we expect a particular currency to strengthen or weaken. All right. So now, how capital flows affect financial market currencies, inflows of money entering into a country. It strengthens a currency as demand increases. All right. When we expect that the country is going to strengthen, demand for that currency will come. People will begin to invest in that currency. So because when you want to buy an asset, a stock or a property in that country, you need to first of all convert your own domestic currency into the domestic country currency of the country you want to invest in. So outflows, when something is going to expected to weaken, demand for that currency will decrease. People will begin to remove their money from those asset classes and put it where they think their money is going to, yield, or maybe economic stability when there's uncertainty. So now stocks. Inflows into a country's stock market can drive up prices. Example of why traders care about capital flows. Let's just look at this example. Imagine you are trading AUD USD, which is Australian dollar, against the United States dollar. All right. Now, global capital flows and global investors expect a high return in Australia, which is, example, rising commodity prices or higher interest rates, and the economy is stable. All right. People are going to obviously put their money in Australian denominated assets because they are going to get higher returns. And United States dollar, maybe, I'm not telling you what is happening now, just an example. All right. And so you don't go and start buying AUD USD. So, and the United States dollar is expected to weaken. All right. That is, a very simple trade carry. AUD USD pair will rise. It will strengthen because flow is going to go in, money, liquidity is going to go into AU. When we say liquidity, we mean money. We simply mean money. That's what I mean of liquidity, for those who don't know. So liquidity is going to go into AUD, and liquidity is going to go out of the United States dollar. So that's what causes interest. That's what we call interest rate differential. So a country with higher interest rates attracts more capital, and then economic growth. Strong economies attract foreign investment. Now, like I said, you don't just go and look for countries with higher interest rates. Investors, first of all, look at economic growth and strong economies. The people that their economic health are better, because they don't want anything to happen to them before they look at obviously interest they're going to get on that investment. So first thing you do is economic health, and then interest rate differentials. Then you look at the currency you're probably going to trade against. So now risk sentiment, this is one of the reasons we have already mentioned is when there is risk on money flows into emerging markets or high currency or risky currency like AUD and NZD. And when there is uncertainty and problem around the world, like happening in Russia, Ukraine, or if the conflict begin to escalate again, or tensions in the Middle East, or maybe pandemic or anything, Investors will put their money in safe haven currencies like United States dollars, Swiss franc, Japanese yen, or things like gold. So political instability, this is one of the reasons that can cause global capital flows as well. Investors avoid countries with political risk. All right. So that is it. For example, nobody will go and buy real estate properties in Ukraine now, or even in Russia. Nobody wants to do that. Nobody even wants to buy in Israel. All right. Nobody will want to go and buy in Lebanon. Nobody wants to go and buy in Iran, because at this point in time, you know, the political landscape of the Middle East is all about wars. It's all about conflict. So we don't want to go and invest in such places that there are, you know, something happening, you know, political stability. So this is one of the reasons that can affect, you know, the flow of money, right? Capital flows, investments into or out of an economy. So most people who have properties, they may begin to sell their properties and then move their money from such economy. So that is still outflow when there are political instability. So the central bank policies, you know, can influence, you know, capital flow, which is when they raise the rate of cut rates, for example, to fight inflation and maybe encourage, you know, maximum employment or economic stability. So how do we use capital flows as a trader? You watch it for news, right? Central bank decisions, you know, their statements, you know, understand the tone of their, you know, their speeches, economic data, geopolitical events, which can often trigger capital flows, like we have said, you know, problem like wars. Now, and you also look at a flow of market sentiment, like I mentioned. I always look at CO2 reports, which I update on an Excel sheet. That's not the topic for today. You know, you can, it's something easy, you can put it there and try to get the flow, you know, where investors are like looking at more on sentiment. When you analyze your fundamentals, CO2 report is a very good, you know, tool to use in trading. You need to also understand market sentiment. This is major part of sentimental analysis, all right? You understand where institutions are putting their positions and trade towards that direction. So it's not just, you don't just go technical and just go blindly and just mark lines, you know, on the chart and wait for 2 EMAs to cross. You have made a decision. No, you need to understand what is affecting the supply and demand of the currency. What is affecting the flows of money? Where is money flowing to, and where is money flowing out of? That's one thing the question you need to ask yourself as a trader. So using tools like commitment of trader, the CO2 report, is also going to help you. Then tracking interest rates, key takeaways. Global capital flows drive currency and asset prices. Money flow opportunity, higher returns, stable economies, or safe haven assets. So okay, so let's just look at the wrap-up. Trading scenarios influenced by global capital flows. So let's say number one, interest rate differential, this is scenario one. Let's say the Reserve Bank of Australia raises interest rates, while the Federal Reserve in America maintains its rates. What's the impact? Higher rates in Australia will attract foreign capital as investors seek better returns, all right? If the economy, like the global economy, is stable, or the economy of Australia is stable, all right, and there is no geopolitical risk around the world, investors will obviously flock to Australia, all right? So this is the scenario. Interest rate differential is one. Now, another thing we look at, okay, let's say when there is problems around the world, let's say we combine, investors will probably look at the side of USD because it's still having currency, or maybe the yen, meaning the AUD USD or AUD JPY pair is going to probably push the downside. So the other example, commodity price surge, which can, you know, affect the Canadian dollar, you know, supply disruptions, oil exporting countries like Canada, which is going to significantly affect the Canadian dollar. So these are just simple examples. You know, you can go on and research. I wouldn't want to bore with this time, but I know my time is already ticking. So we can be able to do some kind of Excel sheet work, but that's the major thing. That's going to make you understand that really what we are actually seeing here is not just theories, but practical things. So before we go on, and I would now like you guys to you know, bring on your questions, and then I can answer it before we go on to the last part of the session, which is just a little practical example on Excel sheets.
So I have a question.
Okay, thank you.
Okay, so the example you first gave about the Australian dollar and the US dollar, that is the inflow and the outflow, the inflow going into the Australia and outflow going out from the US. Is it like is the inflow is done through the forex market or through other securities areas?
Okay, if I get your question, yeah, the thing is done by through banks. It's the financial market. When we say financial market, we mean the exchange of one country's currency against the other. When you are relating it to trading, a weak against a strong currency. All right. So everything is done on the financial market, all right, on the interbank level. All right.
Okay.
So exactly.
Yes, sir. Thank you, sir.
You're welcome. Any other question?
So my question is, how can one get access into this your sell sheet so we can read better and get more understanding?
Okay, that is what you guys will communicate with Sir Uche on that. Then he can come. Then we know how we are going to provide that. If that is the case, it's not something we are just putting out there for free. All right. So I just want to show you guys a basic example using 2 currency and then a free session, so you can communicate him. Then if he wants us to make that available, then we can always do that.
Okay, sorry, I have a question.
Okay.
I'm sorry, I just saw the information like now, not quite long. I joined in like 15 minutes ago, thereabout. Like it was asking if we can make available the recording. I know, but maybe they can send it to us at least, I know, maybe via email, so that we can have access to it, or they can pin it down on this platform where they can share it. So it's only when you're in the platform that you can, review it, because some platforms are like that. Or some people put their thing like that. You just pin down I don't know how they do it, but you can't share. You can only just, you can only just go back and rewatch it. So the second thing is this class going to be available again?
I don't know let me answer the first question. The session is being recorded. That's one. So I think Mr. Uche is going to tell some of his staff to share the recording. And then what's the second question again, if I get you?
I have not asked. I was trying to say that. Yeah, I was asking, is this section going to happen again? And what time, so that I don't miss it again. So I will start from the beginning, because right now I feel lost.
Okay, I don't know, probably. Sir Uche is going to say if it's going to happen again and what time it's going to happen. So he's the one that is going to give that update after our section right now, when we are done with the session. Then he will come on and to have his own session. Then he will tell us if the session is probably going to happen again and what time. It all depends on him and what the community in the trading school, agrees on.
Okay, thank you.
You're welcome. So any other question?
I want to ask. Yes.
Okay, good.
Yes. I want to ask, like, the platforms that we can use to search this news. Like, how can we get those platforms?
Yeah, I'm going to share some news website articles where you can go and get some economic data and read some economic news as well. I'm going to share that. That's what I want to do when we are done with the questions.
Okay, thank you so much, sir.
Yeah. So keep your questions coming. Another question. Nobody's asking me any question relating to what we have. I hope we understood the concept. We're asking me questions relating to deep based on what we have just discussed.
That's because I do not follow and I don't understand it. That's why I can't ask question of something I don't understand.
Okay, maybe you can watch the recording, and if Sir Uche decides to, and the training school decides to host another session, maybe that will be. But I don't think we are going to come back to repeat the same thing again. Maybe not.
Sir, hello.
Yeah, I'm with you.
I don't actually have a question, but I actually need to rewatch it so that I can really come with the insightful question about what I actually want to ask. But so about the like sharing the video out, like I think Mr. Uche made it clear that it's for paid students. It's going to be available for paid students. That is after this meeting. It's going to be available.
Okay,
So I don't know if
okay,
I
sorry,
don't
finish your question.
okay, I don't know if we are going to be able to come back to, even if it's not this topic, but so that I can watch it back and bring my question to you.
Okay, yeah, that's what maybe we are going to discuss, internally, and then, like I know he's on the session, so he's probably listening to what you guys are saying. So if you guys are interested in something, Sauchi will communicate and maybe to other, social media platforms, channels, or from other staffs, then we will know based on the request. So it's not on my own end to decide. I'm just the tutor.
Okay, sir. Okay, thank you, sir.
Yeah, welcome.
Hello, sir.
Yeah, I'm with you. Go on.
All right, quick one. You said something earlier during the course of this class with regards to the fundamentals on the yen pair, and you gave an analysis on NZDJPY, and you were saying basically that you are strong on selling, and I am still curious as to why you want to sell, knowing fully well that we know that in as much as we know the CHF, the yen, USD, safe havens, and we also understand that the US is a global reserve currency. We've seen, aside from technical and fundamental, we've seen that the overall perspective of this market is bullish. And I really understand why you're selling at that point in time, knowing fully well that price is also at a very strong support area, although for the meantime, it is supporting your analysis in terms of fundamental or in the long run. Because you also said something clearly that if you follow this fundamental, right? If you follow the fundamental, yes, you might enter a little bit early, and in the sense that it might go against you, but in the long run, it will still go in your favor. So now, with what you said and what you actually analyze is a little bit contradicting. So I would really want to understand why you're looking at sell at that point in time.
Okay, now, for which pair exactly are you talking about? Which two currencies? Okay, good. Now, let me go to the chart of NZDJPY. So everything here is actionable. Now, I'm not selling from these levels. All right. Now, I've been selling NZDJPY because of these reasons. One, the economic data surrounding NZD, all right, has been weak, which that's what we are going to do. You're going to see that clearly. The reason why I'm doing that has been weak. Two, the RUPNZ is on a cutting rate cycle. They are cutting interest rates. That is the second reason. All right. Three, trade relationship with China. You can see the threat from Trump to China, which is probably going to affect Chinese trading partners, which is AUD and NZD. So when there is weak demand, all right, of these products, meaning that there will be also be weak demand of their currencies, because Chinese industries need to convert their yuan into like New Zealand dollar in this case, for example. If the Chinese government comes next year to weaken the Chinese yuan, so you need more Chinese yuan to buy enough New Zealand to purchase a particular product. Meaning, if you spend 100 Chinese yuan to buy maybe a smartphone, it means you need to be paying like 150 or 200 Chinese yuan to buy the same smartphone from New Zealand. I'm not citing an example. I don't know if I get it. So this is going to cause lack of flow of money into these economies. All right. So these are the reasons. So price, institutions are buying and taking profits, depending on the time horizon, whether on weekly, daily, monthly, or even at an hourly level. All right. So, and I don't scalp, the minimum time frame you could see on my chart is the hourly time frame. All right. So, this is it. And price also move on the straight line. They're always profit taking. All right. There are levels where price could come and pause. The price is started trying to be bullish. Like I've explained the reason why this happened. Price is maybe trying to give a corrective structure. The way I see structures, is different in terms of technical. Like what happened here now, if I can annotate on the chart, here is a corrective structure. If I just let's say a little thing on my own style of technical, right? Here is an impulse here. Here is a correction. I see correction as minimum 3-wave structure. Corrective structures take time. So in my own analysis principle, there's something I call impulsive waves. All right, there's a principle for me that says I don't want to deviate much. For every up move, I know your question is coming up from looking from the technical side. There's going to be another up move.
Not really technical. I'm strong on fundamental too, so I'm trying to understand.
Okay.
Like you said, I'm also a long-time trader. I hold trade for months, even years, right? And I've been, in fact, for the best of it, I've been on the buys on most of my yen pairs, like since the beginning of this year. And of course, we've been seeing some pullbacks, which, for me, I believe goes on fundamental. Everything is still based on temporary movement, because at the end of the year, what the yen is, what's happening in the yen is just temporary movement. It's just the same thing Nigeria is trying to put measures with just to make sure the economy get great. But at the end of the day, the yen, we know it is very weak.
So, that is correct. So, now,
okay, go ahead.
Okay, yeah. That is correct. There is something we call economic cycle or business cycle. Do you understand the economic cycle very well?
Yes.
Okay, good. The economy is always moving in cycles. Now, saying that the yen is on a downward slope on the very much long term, that is correct, simply because of interest rate differentials. All right, but economies are always changing. This is seasonal. All right, so for me as a trader, I'm not trading, on that a kind of as a position trader to just on that long term. No, I'm not doing that.
Okay.
I'm trying to understand the shift in policies. I don't know if you're getting me, to take advantage of it. Exactly. Good. Thank you. So maybe let me just finish up the explanation. Let's not just be like I'm hanging here. So this is one of the reasons why maybe what is happening here. I see corrective structures as minimum, maybe three-way structure. I see corrective structures that they take time, all right? Because there's something we call order matching process. For every up move, there's another up move, and that's what happened here. For this up move, investors or banks are buying here, so they have positions already. So they need to close. If their real direction is to push the downside, that is the direction of macro, all right? They need to close this buy position, and that's why we call it structure is not with them will continue to the downside. So this is that is what I think maybe could want to happen here. Maybe we may see something like this, corrections like this, give us a upside like this, just to give us something similar to this. If 5 weeks stock, just technical, and then maybe we go to the downside. That doesn't mean that price pushing to the upside means that yen is now big or anything. Doesn't mean it. So it just maybe a technical pullback.
Okay, thank you.
I don't know if you thank you too. Thank you. So I don't know if any other person have a question to ask. Before we go on to the Excel sheet. Any other question? Okay, now, if no question, then I will go straight into the Excel sheets. All right. So now we are going to use.
Wait, sir. Can you hear me, sir?
Okay, I can.
You can hear me?
Yes.
Okay. Because I've been trying since it seems my mic is kind of faulty or something. So
Okay.
I dropped a message, but it seems you didn't see it. I said
okay.
all you've been teaching, it's based on fundamental analysis, right?
Yeah, okay.
So actually I kind of I'm a newbie trader actually, but
I'm with you. Hello. It's like he's off. Network is disturbing him.
I don't think. Sir,
Sorry, I didn't get you. It seems your network had issues. Can you start your question afresh?
Okay, I said that I'm a kind of newbie trader as well, but I look up to this Forex Factory. You know Forex Factory, right?
Yeah, I know Forex Factory.
Yeah, so I look at Forex Factory for any high impact news for the day. But compared to what you taught us today like this now, I think Forex Factory is learning, because the things that actually I joined late, but going through and following up, I say that the kind of fundamental analysis or the events that we put in place that affect trade, they are high end compared to what Forex Factory gives. So now I want to know if there is any like news platform or a way or any kind of website that one can get all these kind of details, all these events that can affect trade for a long time? Because forex practice like maybe for a few hours to a day or something. So
Okay.
we can trade for at least like be a swing trader, things like that.
There is no personally from my experience, with fundamental analysis of macro, there is no, well, unless maybe you want us to render a kind of a service whereby I would tell you maybe during the week we tell you that's one thing, maybe if that is possible, one that we can I would tell Sir Uche if that is something traders need. They want weekly update on currencies that are strong or maybe down to other asset classes. We can give that, maybe, but it will always have to come at a price. But it's something, if you are willing, can learn on your own and develop on your own. You don't, but if you don't have the luxury of time to do that, something, if you talk to Mr. Uche, if he feel that is something that is okay, we want us to do. It's something we can usually maybe help traders to come up, tell them, shift and market updates in currencies for them to understand. And at that time, you will also be getting experience.
Yeah, I think that would be very nice if you can do that, to give us
Okay,
over this market.
okay. You guys need to tell. Maybe I will discuss that with Mr. Uche. If he sees that as maybe every other person may want to say that, then if he sees it as okay, then it's something that is actually nice that can help do that as well.
Okay, all right, thank you, sir.
Okay. So another question before we go on to the Excel sheet. So I think maybe no question. So let's rush so that we can go over to the next session, which is for Mr. Uche. So now I've already put this is for NZD. Now I want to just update this sheet, all right, for NZD. Now this is GDP data, which I've done that. This is just, I was just trying to prepare the sheets to make sure it's there. So I just only, so I'm gonna, as I'm inputting other data, as you guys will be seeing exactly what I'm doing. So now this is GDP for New Zealand, all right? So here we have the change and here we have the percentage change, all right? So another data we I'm going to use is if I go to Google Chrome, I'm going to be using retail sales. So I just come here and I type New Zealand retail sales historical data. All right, and the website I like to get my information from is from investing.com. That is where I get most of this historical data. I use investing.com. So I come here. So I go to show more because I just want to get some more data on retail sales. So I go here, I copy this whole information here, and then Control-C on your keyboard. These are basic computer, actions. I know everybody should know that. Then I come to the Excel sheet. All right. I place it here. I press Ctrl-V and the figure comes. So let me start to, right? So this is GDP. Now here, I still do the same thing. So I match the center, and here is our the sales data. All right. So here I have the change, and here I have percentage change. So to get that, I press equals to on my keyboard, based on the current data, the actual figure minus the previous data results equals to. So it gives me the change Now from here, I can reference this one to just reference the calculation and give me the remaining, the previous data here, so you can see. So here, for percentage change, I press equals to brackets this divided by previous data, close brackets, and I multiply by 100. So it gives me this figure. So what do? I want to click format cells to kind of approximate the figure for to one decimal place. So it give me negative 91. So I can do the same thing and reference other data. So keep going. So the next economic indicator we are going to be looking at is industrial production. So we do the same thing here. New Zealand industrial production. Historical data. So remember we are using investing.com. So I didn't get that, so I can attach investing.com to search. Investing.com to my search. So it gives me that factoring. So let me be certain that that is the accurate figure here. Okay. That is correct. So we are using quarter on quarter. So just to get some more figures as well, I copy down to the release date, Control C, and I go back to my Excel sheet. And then Control V, I paste it. I do the same thing. Change. Percentage change. This minus last figure. So as I'm doing, I'm saving the data so I don't lose the data. All right, but you need to be saving it that day so you don't lose it. So this is our, let's write that, industrial production. Industrial production. Yeah. Now we save again. So you need to be saving your data so you don't lose your data. So the next data set we are going to use is employment figures. All right. So I go back here. Okay, New Zealand. So employment change. So taking that with my sheet here to make sure the actual figures. Okay, that's the actual figures. So also copy the data. C. From here, Control V will impute it and then change again. So equals to this are the change, and then the percentage equals to this divided by this, close brackets, multiply by 100. So we have been seeing that every data set we have been getting in New Zealand has been negative. So can you really see the reason why New Zealand dollar has been weak? So this is just one part of the data, one part of the puzzle. That this is if you use this, you can also be in line with what is happening. This is based on what is happening in the economy now. The economic data, as most economic analysts will want to do. So I go to format cells, go to number to 1 decimal point. That's okay. So now I get that, which is 1 minute. Let me change. So I save it, so I don't lose my data. Now the next thing I do is, because based on how the economy is or the economy is structured, this economic data has their own weighting. GDP may be way more important economic data compared to retail sales. So we assign, based on the structure of that particular economy, we assign weight or scores to these economic indicators, because that is how we are going to understand which one is doing fine. All right, or the weights of these economic indicators. So for GDP here, we have GDP is 4. So we can just put 4 here. For retail sales, the weight is 2. So for industrial production, the weight is 2. So everything is on a scale of 10. All right. So for employment change, the weight is 2 as well. All right. So now the next thing I do here is this. I come here. I don't use this whole figure here. When a score gives me 200, all right, I'll remove 10 and I'll use -20, or if it's positive 200, I will use 20. That's positive 20. So here, I'm going to use -20, all right? I don't want to use the full scale 20 because it's going to overshoot the figure, all right? That's the reason why. So now, I'm going to use, for GDP, we'll say GDP is going to give me, I'm going to use -20. Let me, things are going to obstruct my way. So let me come over to this angle and make it fresh. So let me say GDP. So -20. And then we'll have the next one, which is retail sales. So since it's -91, I'm going to use negative 9.17. All right. So you can see I'm removing one figure. Right? So for retail sales, which is negative 9.17. So we keep moving. So I save my data. Remember that, so I don't lose my data, everything I've done. So here we're just working for New Zealand, right? So the next is industrial production, which we have -300. So which probably -30. So I can increase this here. industrial production. So we'll have negative 30. All right. So now let me put this down. Minus 20 minus 9.17 minus 30. Let me remove it from this place. So it's going to be easy for you guys to understand while we are adding and multiplying the figures. So we'll save. So the last one is employment change, which is minus 225. So that would be negative 22.5. Employment change. So which will give us negative 22.5. So now the next thing I do here is I assign the scores, right? So for GDP, we had 4, right? For retail sales, the weighting was 2. For industrial production, the weighting was 2. And for employment change, the weighting was 2. So now, if I want to sum up these figures, what I do is this. I come to maybe a blank space like this. Equals to open brackets. This minus 20 multiplied by 4 plus the retail sales figure multiplied by 2 plus the industrial production multiplied by 2, that's the weighting, plus employment change multiplied by 2. And then I close brackets. You can see the score it gave me, negative 203.34, right? So now we save. So this is what the general score is giving me for New Zealand, right? So let me do the same for United States dollar. So we'll go over the United States dollar, and then we'll start with the GDP. So we say United States GDP historical data. So remember, we are taking the data from investing.com. That's the website I'm using. Now, this is something again I really want to shed the kind of more light on. All right. Now, preliminary data, that is this P. This is not the real data, but investors also focus on this, but they focus majorly on the real data. All right. So, but for the sake of analysis and what maybe the economy is telling us now based on preliminary figures, we are going to be using the preliminary data in our calculation. So I copy something here, Ctrl C, copy the whole data. Then I'll come here, Ctrl V, and impute it. Start to have GDP. Then here, have change. And here, we have percentage change. Just the same thing we are doing for NZD. So now I'm just going to use the preliminary data, which is this, minus the previous data, which is on September. The one on October 30 is also a preliminary data. So what's to this? So I want to get the percentage change now. I use the change, open brackets, the change divided by that on September, close brackets, multiplied by 100. So it gave me this figure ourselves. So if we compare this, to NZD, we can see that based on GDP, it was showing us minus 200, but now we brought it down to minus 20. But we can see the United States is telling us minus 6.7, which we are going to bring that to minus 0.67. So this is just one part of the puzzle. Now let me open a chart. Let me keep it ready on NZD USD. So you guys can see, the reason that NZD USD has been pushing just to the downside. This is just based on macros. So let's continue with our. So I go on to the next, which is retail sales. So let me save so I don't lose my data. So you don't forget to do that. You save. So the next one is retail sales. So type United States retail sales historical data. To investing.com. Remember, that's where we are getting our data. We are choosing investing.com, but that's where we are getting our data from. So maybe later you may decide to use other platforms like Forest Fact, like one of us mentioned, but I prefer to use investing.com because it's kind of more straightforward and simple to use. If I see anything that's going to reduce, the amount of energy I put in what I'm doing, I don't. Why would I waste my time trying to? So invest.com, I feel it's not a promotion, but that's just the one I prefer. So copy that, Ctrl C. I come here. Ctrl V, which is the for retail sales. So edge. Sales. So here we have change. And here we have percentage change. Hope the session is not getting boring because I know retail traders will be like, what's this guy doing? What is this guy doing? So data for December 17th doesn't come out. So we go back to November 15th. Negative. Our reference equals to percentage. Before that was 70, right? So from October, we are coming down from positive 300, which is why you see even during the month of October, the retail sales data was strong. So it's just zero. So leave that at zero. So, and the reason why this could happen in retail sales is, when you see big companies, institutions are doing transactions for the sake of global capital flows. That's why I mentioned rebalancing their portfolios. So most of them are rebalancing their portfolios for the year. That's why you could see some of this data on sales and everything contracting a bit. Right? This is just seasonal changes, not that the overall economic landscape of America is weak. coupled with Trump policies, which is going to strengthen it. So you guys are seeing, it's still strengthening. Actually, still NZD US is still going down. So I go over to the next data, which is industrial production. Hope I've saved. So let me save it in case I'm not. So we don't lose our data. So I go to United States. Very cool data. To investing.com as well. See, copy. Then we go to Excel sheets, Ctrl V, paste. So change, then percentage change. Now put the figures, post to this, this. Post figure by this. Multiplied by 100. So businesses, institutions are balancing their books. So businesses are just contracting. So you can see, even the industrial production is telling us. So it tells you something. All right, it maintained the figure. It's telling us something from October, November and October and December, which is telling us something. This is seasonal something that you can even go and check. So we'll go to, sorry, I'll go to format sales. Well, production. So I click save. So I go for the last data, which is employment data. NFP this scenario. Who is drawing on the screen? Somebody is drawing on my screen. So please, so don't confuse us. So we'll use the non-farm payrolls in this scenario. See. Go ahead. I have to remove this K here because if I allow the K, the figures are not going to impute. So here we just go to change. Then we'll go to percentage change. And see the figures are crazy. And that's why the market is usually expecting CPI data this week. I think that's today. Yeah, to know, the tone of what the Federal Reserve is going to do. Probably they may be restrictive of not cutting interest rates. So the employment figures is massive, it's strong compared to the last one. So the dollar has an edge on it. So center. Let's see. So we go back to what we did the last time. Let's get GDP for United States dollar. It's 4. Then retail sales for United States dollar is 2. Then for industrial production, United States, the weighting is 1. Employment change for United States, weighting is 3. So we save so we don't lose our data. So always remember you have to be saving so you don't lose your data. So we'll go back for GDP, we have negative 6.7. So remember this the method. All right. So we go down below in figure. So now we use negative 0.67. So we don't overinflate the figures. So negative 0.67. So for retail sales, what do we get there? So 0, we maintain the figure, but we are not going down to anything. So we maintain the figure 0. And data production was 0 as well. So for employment change, the figure is 179.17. So now what do? We save the data again. And then we do our, we bring the figures together. Now we do equals to open brackets, GDP multiplied by the weighting plus retail sales multiplied by the weighting plus industrial production multiplied by the weighting plus employment change multiplied by the weighting, these brackets. So this is what we got. Now, if we go back to New Zealand, which is giving us a negative score of 203.34. I just want to stop here. I don't want to bore you guys with maybe more complex data analytical skills of how you can also help complement correct data and maybe in terms of graph and the rest of it. So this is just a basic thing that every retail trader can do. So if you look at the United States dollar, you can see 534.83. So if we go to the charts and look at the NZUSD pair, You can see what the USD pair has been doing for quite some time. This is from September up to now. So price is not moving because of your trend lines or because of indicators or because of anything you want to call it. Price is moving because of whatever bank and institutional orders. And what are they looking at? Macros or fundamentals, the overall health of the economy. They look at it and with this scenario, dollar is, high interest rates, coupled with geopolitical situations happening around the world, investors are probably going to put their money in dollar. So you can see the reason why the US position that as just a case example. And then after doing this, I go to my COT report. That is not the topic of today. I look at sentiment to see the shift in positions of what big banks are doing, whether I'm going to be buying or selling NZUSD this week. It also gives me a clue to, include sentiment in my analysis. Then before I come to the chart, do technical analysis, then I do some sort of some other institutional tools like use basically just personally to me and then analyze and know what I'm going to get in or get out of the day. So that's just basically what I do. So hope you guys, see, what has happened there and maybe gain some insight and knowledge. So those basic computational methods. Hello, you can unmute yourselves. You raise your hand, then you unmute yourself, and if you have any question.
Hello.
Yeah,
Can
I'm with you,
anybody hear me?
Kelechi. Yes, we can hear you.
Yeah, this particular stuff you are doing calculation. I did not understand. Like I'm just seeing how you are calculating it, but I don't understand it.
Well, it's fine not to understand at the first time. I don't expect you to maybe grab it immediately because most of the traders are not used to, the fundamental analysis and how it's done. So maybe when the recording is in, it's something you can watch. So what I just did here, let me just explain again. Is just after getting these economic data, which is a sort of a coincident economic indicator, telling us what is happening right now in the economy. All right. So which is I used GDP, all right. I use retail sales, all right? Retail sales is telling us because if consumers are spending more money, it's going to reflect on retail sales. So health of the consumers, what are consumers doing? I use industrial production to understand the health of businesses, all right? And then I use employment change to understand the health of the labor markets in the economy. So these are concrete economic indicators that can tell us what is happening right now in the economy. So putting all that together is telling me that, USD, this is the figure USD is giving me, all right? The total figure you can see here. Then I did same with NZD. I can see the total figure is on the negative side, all right? So how I just did that is I just, this is a different study on its own. The weightings are different based on how the, economy is structured, Some sectors, for example, you can't compare the weighting of balance of trade in economy like China to consumers. All right, the weighting in terms of balance of trade, if you are talking about leading economic indicators, that's not what I'm discussing here. It's going to be high for China compared to an economy like United States, because United States is more of a a consuming economy. So the consuming weighting in United States is probably going to be higher than that of China in terms of consumers. But in terms of balance of trade, the weighting of balance of trade in China or an economy like Singapore is going to be bigger than that of United States, because this is majorly an export-driven economy, and anything they do is going to be showing on their balance sheet or their trade balance. So it depends on the economy. I don't know if I answered your question.
Actually, you
Okay.
answered my question, but it will be better. Are you hearing me?
Yeah, I'm with you.
Hello?
I'm with you. I'm with you. I'm with you.
I said you actually answered my question though, but the more I get used to it, the more I will understand it better. That's what I think.
Oh yeah, that's what you maybe now when you come over to the class, subsequent lessons, then maybe that can be practiced and lessons we follow. It's not something maybe you get immediately, but I believe you should have grabbed one or two concepts, that can, change the narrative, open your eyes to certain things about trading, what you really think, trading it is, maybe not what it is, and see it from a different perspective. At least that is what this lesson is meant to be. Not really grasp the whole concept immediately, but at least, you'll be getting some insights to now channel your interest in this. I don't know if you're with me.
Yeah, I'm with you. Thank you very much.
You're welcome. So somebody's raising his hand, and Aboyemi Taiwo. So Taiwo, you can go on mute and go on with your question.
Yes, sir. Okay. I have two questions actually. The first one is the rating. How you rate them? I noticed the first one you rate 4, 2, 2, 2, then something, and this second one, which is the USD, you rate 4, 2, 1, 3. So, and you said that you rate them over 10. So, how did you rate them exactly? Why not 5? Why not 6 or 7? Or why not? And how did you rate them, and why did you rate them? Then, second.
Okay, sorry. Let me answer your first question first. Yeah. So, this is you don't need to. This is something from the academy we can produce you with. Maybe you don't need to stretch yourself with this, because this is you don't need to begin to go deep into economics, like using sort of econometrics to understand the composition of these indicators in each economy or their importance. What you just need is somebody that can provide you with the kind of a formula, just impute it and just get your score. So, but if I can give a little explanation, New Zealand, the industrial production there is way more, dependent. In New Zealand is way somehow dependent on industrial production compared to United States. United States is, one of the highest consumers in the world globally. You can make your research. You can ask Google. It's one of the big consumers. Exports are heading to the United States every time from all different parts of the world. All right, in as much as they produce, but exports are every time heading to the United States. So that is why the United States economy is not very much weighted on industrial. But that's why when you look at the manufacturing side from the economic indicator, they are dependent on services than the manufacturing. The services has a lot of weight. So United States is an economy that offers services instead of kind of goods or maybe raw products, but they offer services more.
Okay. Okay, I got that. Now to the second question. You after you finish the value for the NCD and then for this USD, you didn't really explain how you compare them. I didn't get the last value for the NCD, but for this USD, the last value you got 53483. Okay, this one is
look at the last value for NZ. Yeah, it's negative. So I don't want to start going too deep again to begin to digitalize the whole thing. Just stop here at this major figure. This is just basically what it has said. I want to get this to compare with other economies, which currencies to trade and then choose your currency. So, and another point I'm going to add for traders is, it could be your own opinion, understand, but I think the best thing, right, from how the institutions do it, from what I've learned from experienced traders in the industry is, the one mistake retail traders make is when it comes to currency trading. All right, I'm not talking of commodities. All right, if I want to trade oil market is not like currency. All right, now for currencies, you are when a trader begins to fall in love with a particular currency, you say you like trading Euro USD, or you like trading GBP USD. All right, it becomes so difficult for that trader. Not that the person can't attain success, but it becomes so difficult because you are emotionally attached to a pair, regardless of what happens. So volatility and opportunity may not be on that particular currency, but you just want to, get just trade that move because you feel, you love this move, or you feel you understand the move. You understand nothing. So if opportunity is not there, and these are two big currencies, and because you are in love with GBP, JPY, You want to go kill yourself on GPJ, whereby there are other opportunities in other different countries. This is what institutions are doing. They are looking for where there is opportunity, where there is divergence. So, for example, if you look at something like NZD-USD, you can see how it's moving. So you can't go and look out for one other pair that is ranging and you begin to want to kill yourself because you are in love with that particular pair. This is exactly what macroeconomics will open your mind and help you to do. You look for where there's opportunity, because where there's volatility lies this kind of opportunity. So you're looking for where there is clear divergence, both in the economy and both in interest rates. You probably look for technicals towards that direction. You just be making your money. Like I said, when you're there, you could only be wrong with timing. All right, you could only be, maybe you enter too early, all right, or maybe enter too late down. So, but in terms of the direction, you already know, because and macroeconomics helps you to trade with confidence, because you know the flow of money, you know that the markets, you know the tone of the market, you know the sentiment of institutional traders who are bringing in the liquidity to move the market. So it helps you trade with confidence. You don't begin to trade whether this level is not going to hold or going to hold, depending on your technical system. Even if it doesn't hold, you know that, like I said, maybe it's just based on timing, and nobody's manipulating you or hunting your stop loss. You just entered at the wrong level. All right. So that's another thing. So just know the flow of money. Nobody's manipulating you. Everybody's here to make money. Even institutions also lose money. So everybody's here to make. Nobody's manipulating anybody.
Okay. Thank you, sir. But this is just to confirm. It's not a question per se like that. From that NZD, it was minus 203. Then this USD 534. So is it because the USD, the value is higher than the NZD? So which means US dollar is stronger than NZD, and that is why NZD is plunging.
Of course, yes. Because if we look at it, also directing it to monetary policies. Now, most central banks, but in this scenario, the Federal Reserve, they have what we call a dual mandate. The major thing, that concerns them about the economy. Maximum employment and price stability. And when we say maximum employment, we are talking of employment. And when we say price stability, all right, we're talking of inflation. So CPI data today is going to tell us if they are going to cut rates, all right, or they are going to, leave rate restrictive. If CPI goes up, better for us. The dollar is going to be strengthened because they are most likely not going to cut rates in their next meeting, or maybe they just cut by a quarter basis point, 25 basis point. So CPI data today is what the market is probably, or our investors are focusing on. All right. So when CPI data today is strong, is high, expect the direction of the market. I'm not saying trading CPI that day, because this 4 traders will go and get me wrong. I mean the general direction of the currency on maybe short to medium term. Dollar is going to be strengthened. Maybe removing the seasonality, effect we have on the dollar this week, this month. For example, if I go to, let me get a sort of a seasonality tendency for you guys here. So let me move this. Let me hide this. So if you look at this now, this is, monthly performance heat map of different asset classes for currencies, forex, indices, and bonds. So let's just focus on currencies, right? If you look at dollar, we can see is red, yeah, it's negative, telling us that dollar performs, bad. In terms of 20-year range, a 20 years data, December's dollar is not good. So and euro is usually good during December time. So you can see it's just a seasonal tendency, not really that euro is strong, because if you go to euro USD now, euro USD may be giving you some sort of kind of a little bit of technical pullback to the upside. Yeah, understand? So not necessarily because that euro is strong or anything. It's just because of the seasonality that we are in. December is not usually a good month for the dollar, irrespective of the macros. But I don't just base my analysis on the seasonality, because I know the underlying factors. All right. Seasonality can be a guide, but macros should be the drive. That is just how I'm going to put it.
Okay, thank you, sir.
Okay. So I don't know if any other person have any questions. So we can rush into the next session. I think I've exhausted more than two hours now. So
Hello,
goes
hello,
over to the
sir.
next one.
So I have a question.
Okay.
So when you were calculating the NFP, you minus some Ks from the just like 2 Ks, and you left others. You didn't touch others. I don't know why. And this rating, I don't know how you come up with this rating, because I understand everything you did here, like the calculation and everything, but I don't understand how you came up with the rating at all.
Okay, now the simple reason why I remove the K is because if I allow the K and add it with the K, it's going to give me an error in calculation. Right? That's why I remove the K to just use the figure. Now, let me just show you an example. If I do a post now and do this minus this, you see? So that's just the reason why I remove the K. I already know that because I'm used to Excel. So that's it. And what other question did you ask? Okay, how I got to know the weightings, all right? I explained to somebody here, it's based on the structure of the economy, the dependency, how economy is dependent on each, component of these economic indicators. Most economies are solely dependent on, the health of consumers. Some are export driven, meaning things like industrial production, and retail sales is going to, have extreme weights, in the economic rating or weighting, like countries like China, Japan, and Singapore. These countries are, export-driven economies. So that's just the reason why.
I think with time we will get to understand this. Stay a bit confusing to me.
Of course, with time, but you can get your process covered with time. So I think maybe we don't have it. Does anybody have any question? So we can go over to the next stage of the class for Sir Uche to come and start the analysis and for oil and gas. So I think Sir Uche, I don't know if you are still online, then so you can take over. So I think nobody has any question again. I believe we have enjoyed the class, and this session is like an eye opener, to what retail traders see, or perceive the market to be. It's not exactly how it is. If you ask Saudi, how we analyze this, paying attention to OPEC report today, this is going to give him, understand, supply and demand factors, in the oil market, coupled with geopolitical situation in the Middle East. All right, OPEC from the supply side, and a little bit reports about demand. So it tells him how he's going to base his technical analysis on oil, and he makes informed decisions. So that's the reason why macroeconomic is really key. That's the first thing you have to do to get a bias. All right, you don't get your bias from technicals. A professional way of doing something, if I have to be honest with you, you have to get your bias from fundamentals and then overlay them on the charts and then go over to technicals. So thank you very much, Sir Uche, for the opportunity.
Sir, before you leave, you said that you will give us some site for that we should be getting this from.
Okay, thank you very much. Let me quickly do that. So to get some sites, like you can go and read some fundamentals, update and articles. One, you can use Forex Live. All right, Forex Live is a good one where you see the hints of what other economic analysts, their thoughts about the market. Another one, you can use CNBC. CNBC is a major one. You can use also use INGFX, where you can get things like credit rates, commodities, and the rest of them. And okay, then trading economics is another good one. You can also get updates about financial assets. Then obviously investing.com as well. Bloomberg is another, but there are many of them, but you can just maybe focus on this. All right. So maybe when you come over to the academy, will now maybe kind of give you more, but these ones are basic. If you really want to, with this, we are fine. We are okay, believe me. The other ones is just you don't want to maybe go more in depth. Yeah, because if you're talking about going more in depth, there are maybe you guys may not be familiar with it for now. There are kind of platforms like Coifin, all right? Maybe they are not just on currencies and looking into maybe other financial assets. All right. like other index stock and the rest of it. But this is going to be, you can see if you show retail trader on this platform now, you'll be confused. You don't know what is even happening. You'll be like, what are you saying? So, but these ones are basic. You don't need to, we are not trying to be an analyst, maybe to provide economic direction to maybe to some group of traders. Understand? Just for your own, just focus on this. You don't need to start stressing your brain. Your job is just to simplify it and make money. That's all. You are not running a hedge fund or running an investment bank.
All right, thank you, sir.
So thank you very much, Sauchi. Thank you. I'm really glad for the opportunity.
Okay, yeah, thank you, thank you. I think you all got value, right?
Yes, sir.
Are you sure? Or you are confused?
No, I'm sure.
Yes, yes, sir. But we are confused in some area.
Yeah, because an educated trader must be a successful trader. Also, an educated investor, of course, will be a successful investor. You know what I mean? So now, what makes it to be a good trader is beyond those basic things. And that is one of the reasons why people are finding it difficult to scale. Once they get to some certain level, then they prefer to remain there and conclude that trading is not real. You know what I mean? Some say maybe trading is a scam. That's because you don't understand it. You're already scamming your brain. It's not that the market is a scam. It's we have already scam our brain, thinking that scam our life out of the whole system. But for you to be a trader, there are things you need to do. A lot of us who are there for a long time have a lot of secrets, which are these things you are giving you. We knew where we give it to you free. It's a value that even though they want to ask you to pay for it, you may not see the reason why you need to pay. Because our mind is a bit limited to some certain insight. The more you know, the more you grow. Do you understand? So, but if you don't have an insight into something, you won't like to go in for it because there's not any particular insight. But all of these things is available to you because you're a student or you are an aspiring student. But how to make it easy is at the end of the day, you will see where we are going and how we get there. Then you can go there together with us. From the analysis you gave now, you can see that from just the figure, without looking at the chart, you will know that dollar is dominating his land. Secondly, it falls in line with our definition of FX trading. What is forex trading? We don't define it as buying and selling currency. No, we define our own. Trading a strong currency against a weak one, or trading a strong economy against a weak economy, or vice versa, because our definition determines our strategy. We don't say buying and selling currency. No. So once we give that definition, I will now ask ourselves which economy is strong, which economy is weak, which currency is strong, which currency is weak, or which currency is going to go strong, which one is going to go weak. Do you understand? Because sometimes you could be using past performances, but we also need to have insight about the future. That's also why when we are trading a volatile commodity or a volatile asset, even though it's having a very rough past record, we'll be looking at for future. We will start investing in that economy when the price is extremely low or when it's bad, believing that well, we have seen the insight about the upcoming policy that will change things and things will become better. So when we invest on that level, we'll make more profit. Do you understand? So now, what we do in our academy, based on mentorship, that's why we tell you training and mentorship is not the same. Mentorship is where you make the money and it takes some time. Is to be able to drive all these things for you. Even as much as we keep showing you how it works because you paid for it, we'll also be drafting it for you, giving you the end product of result. This is where you should do. This is what we're trying to do. This is what we're expecting to come out as outcome. Then you now you can be able to place in your trade, making your money and learning. Because if you're not making money, you won't like to learn. Do you understand? Then we also make it easy these days where we also eliminate people. In case you don't understand it, but you're interested, you could start trading with free money, like a startup capital. That's not your own money, so that your mind will be zero to do the job. And you make money, you go home with 70% of the profit. So it's as simple as that. Do you understand? So you're not even putting all your money at all into the business, where you're getting a value of something that is unique. that other people in the past, some of us couldn't get that opportunity to have access to trade real money. If you learn forex finish, either you trade them or you go and fund the account. That's the truth. Then you now start trading. But we have exhausted all our time. We don't have much time again. I can only use, I'm time conscious in my stuff. So I can only use only 9 minutes to give us analysis for today. So we're already heading to 1 p.m. there. And today by 3:30 p.m. we are trading oil. Those of us who are already on currency trading, using New Zealand USD as a case study, we could see that the market is going bearish. So assuming we want to buy them or sell them, we can be able to make a very informed decision of our position. Let me share my screen with you. So for those of us who are our students, you have more thing to gain from us. Those of us who want to join us, learning is not risky. I encourage you to join us. But if you think that it's not worth doing it, then it's up to you. I would really encourage you to join us so that you get more value to it. We provide value first, not unnecessary money. We give you value, we get reward, then you get value, broker get value. Today we have inventory report, which is coming up by this time. Is different from your time. It's 3:30 your time. Our time is 3:30. I've not really changed my time zone since the time zone changed. So, and they are expecting a lesser supply that's different from what we had last time. No, I'm on the wrong date. Yeah, today. So we have it here. Here, so here. Yeah, okay. My screen, let me make it manually. Here. So, and they are expecting -1 million compared to what happened the previous. So today, by exactly 3:30, we'll see the outcome. But this is the situation of the oil. For those who are trading, we analyze buying oil. The reason why we analyze is because of the price is extremely low and there is consistently supply cut coming up in the market, and OPEC decision is already there to cut production, and demand and supply is the driving factor. But demand is actually low. That's why they want to cut production. Demand is low in oil. But at this range, it's a very good one. The ones we have been buying, we are already making profit. Some of us bought here, if you have been following us since. So we bought at this price. Then there's a price we bought here. That one must have recovered because the price has hit 73. So it must have recovered. Then we also analyze on gold. On gold. So gold, we don't encourage anybody to sell gold this time around. So we emphasize strongly on gold. If you check on gold information on internet, you will see that we have more demand for gold than supply. We have more demand for gold, and the prices in the Middle East is gradually escalating. The price of gold is possibly going to hit 3,000 in the coming days. And if you check the gold data, you see that it has never depreciated. It's always on a long range going up. You know what I mean? It's always on a long range going up. So for those of you who are joining us or who are already trading with us, take note, our analysis on gold is still valid. The one we have on oil is valid because I'm believing that there will be shortage of supply. Even if the report is not exactly what we're expecting, we are not necessarily going to change our position for now. Then we which other one were we trading on? Was it US Canada we are trading? There's another one we are working on. I think I think Chef. So based on the demand zone and supply zone, so we are also expecting some pullback here until this particular zone is finally broken. So if it's broken, then we change. The one thing about market analysis, we try to analyze the future, not just the present. Sometimes we can also use the present to determine the future because things can change at any time. That's why no analysis can give you 100% accuracy. But you can be able to, on institutional level, you can get trend where the market is going, and it will help you to make a long-term informed decision. That's why we said people who trade for a long time make more money. In our academy, we try to teach you those things, how to be able to drive on a long-term analysis so you can be able to be profitable. I don't know if you have any question. We give assignment to people who are still learning with us. Assignment was, I don't know who else have done the assignment. I think Idris, you're part of the people who gave the assignment. Have you been able to do the assignment, or we should keep it till the next time?
Actually, I haven't done the assignment because after I did the last one, I haven't started this one. I'm thinking of keeping it next time. We do it maybe today or tomorrow.
Okay, yeah, because it's a research work, so you have to take your time and do it and see and give us the outcome. But I would really want you guys, if you are interested, to learn more about macroeconomic data analysis, so you'll be able to know how you can apply it by yourself. But our own side here will be giving you the feedback anyway. That's why you have to trade with us for 1 month minimum, 6 months to 1 year. Keep trading with us. Then they see how far our analysis will go for you, whether you're gonna work well for you or not. Do you understand? So basically, by 3:30, we'll be on our Telegram or WhatsApp channel. We'll give you updates on oil, also give you update on other informations or on other assets. So in case you want to trade on it, you should be able to go in and trade on it. So for those who are looking, who want to join our academy, I encourage you to join the academy as soon as possible. And we are also giving out fund for people to start trading. It's like a grant we are actually offering through another broker. We secure it. So now we don't have much slot. We got a few slots today, this morning. It's not up to 5. So anybody who's interested to be part of it could register with us and have access to capital so that you could be able to start trading. And at the same time, remember, as a student, we'll be assisting you to make those executions, and you go along with it. Our next class, we'll talk on risk management. We are not talking on that one. Probably, maybe on Friday, we'll be able to give you risk management class to see how far you'll be able to go in terms of managing risk. We all want to see you to make profit because that is our own goal as academy. If you are doing well, you become good for us. We are not a broker, so we are not competing with you. If somebody raise his hand, let me know if I have a question because we just have only 1 minute.
Hi, Uche. Good afternoon. I'm asking, how we join the academy?
Yeah, you can register on our website. If you are in Nigeria, you could. Are you on our Telegram?
I just joined today.
Okay. There's a WhatsApp I will give you. Let me get a WhatsApp number from our site. There's a WhatsApp I will give you. Send a message to that WhatsApp. Our academy is not free. If you can see this class, it's not supposed to be free, but we just want to give it to you free. Although once in a while, we give free lectures at least once a week. Do you understand? But just to let you know that we are value-driven academy. Everything's all about money. Sometimes we try to give out value, but not everything shouldn't be all about free on your own side, because it will make us not to see you as a valuable person. I'm not talking to you as an individual. I'm talking to you as a general concept. Do you understand? So somebody said, I'm in Kenya, but I want to join the academy. Yeah, you could join our academy. We have people from Botswana and Canada. There's this country in Africa. We have a lot of students from there. They speak French. It always escaped my mind. Is it good? It's not good before. Burkina Faso. Burkina Faso. Yeah, we have people from there. We have people from Uganda who are in our class. So you can join our academy. We give you value. I will send you the website, or look at this WhatsApp number now. I'm dropping it for everyone to see. So WhatsApp us on this number. We'll be able to help you. We'll be able to help you get you registered to on our school. We have 1 month mentorship and training. We have 6 months mentorship and training. Then we have 1 year mentorship and training. These are part of the mentorship. For example, now we could say, okay, we want to give you the future of Euro USA for the next 3 months. When we get all this, we let you know, be following you up, telling you what to do, then you keep trading. That's how we do. Money making is not hard. It's just a very simple concept. Then you start making money. So if you join our academy, we give you capital. The promo will end on in 4 days' time. Today is 11, probably on Friday. It will end because weekend may not be at work. So we'll give you capital to trade. So you shouldn't bother about if I pay for this, I say pay for capital. No. You could start with up to $1,000 with us and be trading. And then you can also start with up to $10,000 with us. So somebody said, I need this question fast. I need the question of last class so I can plan on research. So our question was to go and research about 10 forest fundamentals. 10 forest fundamentals and the applications. So it's not based on macroeconomic analysis, just to know them, know how to interpret them, but analytically they will let you know how you can apply them. Do you understand? So if you join the WhatsApp, you could be able to get our people to register you on our trading school. It's not expensive. Let me give you another website. These are our website as well. Okay. This is our website as well. Let me send it to people. Yeah, so this is our website. But we can actually, if you're in Nigeria, we can register you directly from Nigerian link where you pay us in Naira instead of paying us in dollars. Do you understand? You don't need to convert your money to dollar. But if you have a dollar card, then you could pay. But just start us first. We'll be able to assist you, especially if you need our capital. You have to be sure you're gonna get it first before we ask you to register. Will I qualify for promo fund if I join? You may be qualified, but it's just all about availability of fund, because it's not something we do regularly. It costs us money as well. So it's just all about first come, first serve. Yesterday, there was no fund apart from money for $10,000 that was remaining. So there was no fund, but we got some fund later that we are now giving. So because we are ending, we have funded more than $50,000 already. So we give value to people. That's what I told you. It's business all about giving value. It's not all about money or free all the time. So if you can be able to afford it, you join us. So we have solved you the problem of raising capital while you are learning. We also solve the problem of trading with your own money, or solve the problem of going into market with emotional attachment, risk and fear, because your money is involved. But now, since there's a grant given to you, so you're not necessarily at any kind of risk, and there's a sound knowledge following you up. So I believe you're going to be a profitable trader. The things are changing. The level we are last year is not the level we are now. So if you want to join us, join us. Any other question, please?
Yes, I have a question.
Okay, please ask.
So, will Mr. Moka be lecturing us anytime soon again? Because we really need to know more about that weighting, how to know about the weighting number.
Yeah, I think you're our student, Idris. I know your name.
Yes, sir.
Yeah, of course. If you will lecture us, we have different lectures. If you check our site, we have different lectures coming up. Because we are not teaching you about equity, not online trading, no more equity. Our facilitator on equity is coming to teach you. Then we also have gonna give you a course on wealth management and investment banking. Because some of you may start moving from regular trader to institutional trader, owning your own company and stuff like that. So you need to know some things beyond MT4 and MT5. So he will come and give more lectures on his own aspect on this level for you to understand more. But basically, it's kind of for our students. That's why I said, if you get value from what you are giving, then you join us and get more value.
Okay, sir.
Yeah. So this is 106. I think we have to let you guys go now. If you have any question, let me know. Let me know if you have gotten all the details that you have, all the information you have available that you need. Please just let me know. I don't want to end the meeting while you're still confused. Do you have anything that you need to know from us? Please, I'm the one of your student that 1,000 with total drawdown. So please, I'm one of your students. The account with it is total drawdown. I don't know exactly what this question. Maybe you omitted something. I'm one of your students. The 1K account. Okay, what? Oh, what the total drawdown? I think is 10%. It does 10 to 12%. I think so. It does the drop down. That's why our next class may be risk management before we go back to advanced macroeconomic analysis. So the total drop down, I think, is between 10 to 12% total drop down. Do you understand? Yeah. That's the only condition attached to it. Let me know if there's another question.
Yes, I have one question. Sorry, I just saw
okay.
on your Instagram page that there is an opening. I've not worked with a broker, but I've been trading. Can I still apply?
No, I'm not even in charge of employment. I think we need the call center. It was a call center, call desk agent, call agent, an agent that, that call agent, like admin agent. You know what I mean?
I know what you mean, but they specified work with a broker, but I've been trading. I have experience with trading.
Yeah, because the knowledge of the language of trading is different from regular person, so that anybody who's calling a student or calling a trader will be able to know, that trader should be able to know, you know what I mean? You know what to tell the client, so that that's just why they said an experienced person who has worked with a broker before. I don't know if there's any of you who is looking for a broker. So you could use the broker we are using to trade. It's a very good broker. And because of the volume we control, we use only exchange-based brokers. And we also have automation, a system that helps you to automate your trade, and you make money without you being the one trading. You know what I mean? So we can also, so you can use any of the brokers we are working with. It's not on funded account basis. It's for like those who are already into investing directly into the financial market. Then you can be able to go through it. Then we also teach on futures. Futures and CF is not the same. Those of us who want to migrate to that level of trading, they will be able to also give you teaching on that one, on the futures. So I don't know if any of you be interested on that one. We can be able to we want to give you something you could practicalize, not just something you cannot be able to practicalize. So you can join any of the brokers we are using and get value from it. Maybe we will share the link on our Instagram. I think that no other question. So how many want to join us? I can know if there's a way we could be able. Okay, I can hear you.
Okay, sir, just a quick question with regards to the funded account. Do you people sell your funded account to non-members?
We don't sell account. We're not a broker. We are academy. We're not even a pro firm. Just that this we do promo once in a while. Around June, July, we are giving discount, 10% discount on anybody that wants to join us. So this is Festival of Profit time, where we are now providing grants for people who want to start trading, student. Because one, when you want to learn trading, you pay for academy, you go and look for money to start. It's okay, no problem. Since we have access to money now, and not just from profit, from brokers, not just one, different regions, we have different brokers that can provide funds for them. So we say, okay, let's fund our students so they don't need to start. And I can tell you, some of them too want to start with $100, $200. Then why it's not good enough for them to make good profit. Now you can start with $1,000, $3,000, even $10,000. So you're no more going into trading with risk at all. So it's not something we sell. Anybody who have totally know that there's a demarcation between us and brokers. It's not something we sell to people. We don't even sell it. And because it's free. The money you're paying out for training is the same money. Even if you stop the promo, we are not going to reduce our training fee. It's the same training fee. Those who joined before to know that they paid the same amount of money and they did not get anything because the promo has not started. Do you understand?
Okay, this is clear.
I think no other question. Today was a very wonderful class. I don't know if you guys have got value. Do you got value? Do you think we should do this class again?
Yes, we got value.
Yes,
Thank you
we
very
should. Most people don't
much.
even know about it. I joined very, very late, so I don't have any information. And we're talking about the recording. I don't know if there's any way you can give us the recording.
The recording will be available for our students. We'll send it to them. I'm not sure if you're going to be available on our YouTube channel. Even if it's going to be available, maybe it will not be now because we'll take time to edit some things and publish it. But if you want it raw, those of our students, even those who are not here today, because not all of them is here. I know some of them. We'll make it available to you. If you join us today, we'll just give you the recording. I'm not sure if you're going to be available to everyone, to be honest. Me, I got value because I learned from everywhere. I was more interested on the practical aspect. So in this area is the area you need to know more, how to analyze more of all these things. You know what I mean? So I think you say you're gonna join us. If you join us, we can send you all of these things. It could be to be available, but I'm not sure the length it will be available. But not every of our data is for free. Because people are already paying for it. So why do we give other people who doesn't pay for it for this thing? It's like cheating. So it doesn't make sense.
How much?
Okay.
How much is the fee? How much is the fee?
Our training fee for 1 week is $50 1 week, but you're not gonna get funded. Our training fee for 1 month is $170. You get $1,000 fund. Our training fee for 6 months training and mentorship. Mentorship is most important. Don't forget. It's about $500. You have this discount of $100 or $70 on them, and you get funded account of $3,000. Then our training fee for 1 year mentorship is about $1,250. But the Naira value is different. That's why I chart that number. Naira value is different. Then you get the Naira value of it. Then you get $10,000 capital. If our promo ends, you will see charge the same amount of money. Because mentorship is where the major work is. It's not on training. Like what we have now is training. But if you check very well, not everything has been absorbed. Mentorship is like sometimes we do the mathematics from the behind and publish it to you. This is what you're expecting on this. This is what you're expecting on this. Give you the reason. And I give you what you're expecting as a return on investment. Then you act on it. Then you see the same result. You train together with us. That's mentorship. And that's where you make the money. It doesn't matter the broker you're using. You can use any broker. If you want to use our broker, fine. No problem. But that's how it works.
I see. Right.
Okay. So, sorry. I'm sure you can get volume. That's why everybody's quiet. Probably you saw it, the training in a different dimension. But I can challenge you to go further. You get more value from it. You know why we're different. So I think I'll end the meeting now. It's 1:15. So let me allow all of us to go home. I'm coming back online to trade by 3:30. Anybody those of us who are into oil and gas class with me, I don't know if I can be on live. But if I'm not on live, chat me directly on WhatsApp. We can be able to tell you what we're doing and be able to trade together. If you want to trade, make sure you let us know that you're trading as our students so that we'll know the position you're taking and know how far we can be able to monitor it and know when you should exit the market or when you should stay with the market. Because our goal is to make sure you're profitable. That's our own goal. Yeah. So thank you, everyone. Thank you, Aboyobi. Thank you, Adejo. Thank you, Gabriel. Thank you, Promise. Some name is difficult for me to pronounce. Safelahi Muhammad. Those from Nigeria, those from Kenya. All of you, thank you so much for being part of us. and see you in our next class.